evening. So this evening we are going to be looking at some part of the final accounts. Right now I'm having the feeling that maybe it has been a long time that they brought issues on cash flow. So maybe they can do some magic. So we are going to be looking at cash flow and we'll be talking about some of the words. It's the final account is the old one that you are going to be seeing there. The way the final account has been there, that is how it will be there. It can be on the central government, which is the consolidated fund. It can be on ministries. It can be on the district assemblies. It can be on any autonomous entity like hospitals or government institutions like educational institutions or whatever. Okay. Yeah. The note on corporate governance, I'm on it, and maybe God willing, I'll share it tomorrow. So I'm done. I'm almost done with the functions of controller. So I'll be adding some of them too. So we are going to be doing the IPSAS tomorrow. So we do some of the IPSAS. So I'll add some of the questions there. But by tomorrow, maybe you should have it. By tomorrow, you should have it. And we meet on maybe Saturday in the morning to discuss some of them, and that will be fine. Okay. All right. So I'm actually done with that one. Okay. So we are going to be looking at final accounts. Okay. Please this one. Okay. Let me be talking. So we are going to be looking at final accounts. Okay. So the final accounts is just like the statement of profit or loss that you know under the private entities. It's the same as the statement of financial performance. So we'll be looking at the final accounts. The final account will be looking at the statement of financial performance. So they'll ask you a question on statement of financial performance. Okay, statement of financial performance, which is just like profit or loss for the private institutions. So we also look at the statement of financial position, just like the balance sheet that you know, okay, financial position. So since the government or the district assemblies are going to be using money, they are going to be incurring expenses and they are going to be generating revenue. At the end of the day, they have to prepare account. Yeah, for the purpose of accountability, they have to tell us that the money that they have been spent and the money that they have generated and what is the net amount generated. So they can also give you something on statement of cash flow, which we are going to be looking at, although it's not any issue. Statement of cash flow. The statement of cash flow is just like cash book. Okay, it's just like cash book, but you are doing it in a what? In a vertical format, or you are dividing it into what? Various sources. So the monies are coming in and you are spending. So you say that, okay, this particular amount of money is coming from our day-to-day activities. So let's classify this one as operating activities. This money we are receiving it because we want to invest. So we are putting money into other investment. That's why the money is coming in. So we want to classify that particular inflow or outflow as investing activities. We are getting this money because we are getting this money because we are actually what? Borrowing from other people. So it's a form of assistance given to us, which we are going to be paying back. So we say that is going to be treated as financing activities. Okay. So it's just the normal cash flow. But for the public sector, it's very simple. We don't use indirect method. So we use a direct method for the public sector. It's a very simple exercise. Okay. They can also ask you statement of budget performance. Okay. Statement of budget performance. So the statement of budget performance, they will ask you to prepare the final account and they will ask you to add budget information. So they will give you a budget for the period. It can be the original budget, then they will give you some adjustments. You now get a final budget, or they will give you the final budget. Then the statement that you have prepared is the actual budget. So you prepare a statement of comparison, comparing your actual result with what? With the budgeted results. So they can also ask you to do statement of budget performance. Okay. This final account, they can ask you to prepare the final account for the central government, which we call the government in power, or the government. They are going to be making any expenditure and any receipt will be going to the consolidated fund. So they can actually ask you to do for this one. And you are going to be having their revenue and the expenditure. The classification of the expenditure for all of them is the same. We use a gift mix classification. So the revenue for the central government over here will be from taxes. We know that the major major revenue is what? Is taxes. And the taxes, we are going to be having the direct taxes. So they'll give you the direct taxes there, you put them together. Then we have the indirect taxes. Okay. Then we have the non-tax revenue, which will be the fines and penalties. So those revenue that are not coming from taxes. Then you also have grants, okay, some assistance given or donations given by individuals or what other organizations to the state. So we have grant donations, and we have issue like the gifts. Okay, these are the major revenue that you are going to be seeing for them classification. So they'll give you the items, you have to classify them under any of these ones. If you come to the expenditure classification, it's going to be the same for any other public sector entity. So the expenditure classification, we have the giftments classification where they will give you a lot of expenditure. Please, you are preparing this for publication, or you are preparing this for external use. So you don't have to come and say administrative expenses. Then you list them in the statement. No, you are going to waste the paper. So we do this one, we prepare this account in line with what the IPSAS one. So we have to do workings, like how you do workings for cost of sales, how you do workings for administrative costs, how you do workings for distribution costs under financial reporting. We do the workings over here. So all those expenditure relating to employees, payment of salary, allowance, whatever that we are doing because we are employing the person. All those things are called compensation for employees. So the salary of the employees, they will be giving you established posts and non-established posts. Some people, they are working and they have a post. Some people, they have a workplace that will come. But some people, they are just employed. They are just on time, on part-time basis, or they are just on contract and all those things. So anything relating to the employee, rent allowance, sleeping allowance, electricity and allowance, car allowance, fuel allowance, all those things that they are giving to the employees, okay, they will be treated as what? As compensation for employees. All those money we are giving to the employees as a result of the person being employed by the state. They are called a compensation for employees. So all those items, all those costs that we are incurring for administrative purposes, in order to run the what? Run run the entity on administrative basis, all those ones are going to be used as use of goods and services. And this use of goods and services, purchases of what? Stationery or purchases of some items, cost of sales, and all those things are captured in the use of goods and services. So stationery, consumables, if you are buying them, they are all for administrative purposes. So those administrative expenditure are all going to be classified as what? Use of goods and services. Then you have the interest. Okay, the interest over here is just like the government is going to borrow. Government of Ghana cannot be able to carry out their activities when they don't borrow. So we are going to borrowing and we are going to be paying interest. So all those interests that you are going to be paying, bank interest, interest on the financial instruments, all those interests will be put together to have what we call the interest. So you'll be having a bank interest, you'll be having the interest on external debt, interest on borrowing. They will be giving you the interest in the statement. Then they will say maybe the interest is in arrears, you have to add some things, owings and the prepayment. Okay. Then we come to consumption of what? Consumption of fixed capital. Consumption of fixed capital is just a depreciation in the private sector. So the government is going to be buying what? Fixed assets, non-financial assets, capital assets. So these assets are going to be having a useful life. So their cost is going to be spread. Their benefit is going to spread over their useful life. Mostly they are going to be giving you straight line basis or reducing balance basis, or they are going to be giving you a situation where the public sector entity is using cost model. You can see that right now we are doing IPSAS 2. So IPSAS 17, they can give you an asset that will be valued using revaluation model. So you have to revalue the asset at the end of every year. But one interesting thing in the public sector is that valuing this particular asset is going to be a problem. Okay, so they are going to be, the assets will be given to always be carried at the cost model. But if there's any issue of revaluation, in the question, you will just account for it like the normal revaluation under the PPE, IS 16 or IPSAS. Okay, we have done something like that. So you also come to issues of subsidies. So the government will be giving some assistance to industries, most especially the coming industries to reduce their production costs. So they will be giving you petroleum subsidies, some subsidies they will be giving it to you in the question, and you have to also classify all those things. You also be having social benefits. Social benefit, the government will be coming through for some people, okay, like some social interventions. The free SHS is a social benefit. It's an intervention that is going to be helping the citizens at large. So all those interventions that the government will be doing, and that is going to be helping all of us. Okay, that is a social benefit. Something that we are all going to be benefiting, majority of us are going to be benefiting from. We call it what? We call that one social benefit. So the free SHS is a social benefit. The feeding program for the what? The feeding program for the basic students is what? Is the social intervention, therefore a social benefit. The issue with the Akosobo Dam issue, that the government has to spend money on those people who are affected, that will be classified as a social benefit. So all those social interventions will be classified as what? As social benefits. After this one, we have issues like grants. Okay, so the government can also give assistance to what? Other people, and these grants are always going to be like the the statutory what transfers. Okay, so those district assembly common fund, government is going to be classifying those things as grants. Okay, they are giving assistance to those people, or the government can also give assistance to what? Other private individuals. So the free districts, there are say free districts, the one district, one factory projects. Okay, the government can actually assist some people to what? To set up. So the government will be giving them grants, assistance. That will be an expenditure to the government. So we also have other issues that cannot be classified. So we have some of them that cannot be classified. So we call them other expenses. These other expenses are going to be like provision for doubtful debt and other issues. Provision for doubtful debt, other provisions that they cannot find their way into the compensation for employees, use of goods and those things, they cannot find their way there. So we are going to be putting them there as well as other expenses. So the question will give you, and you just have to do some adjustment to these items. So they will give you some of them in the trial balance. You just have to do adjustment to some of them. Okay. Then this particular one can also be on. So I'll just combine all of them and talk about now. So it can be about the MDAs. So we have the ministries, we have the departments, and also the agencies. So they can give you a question on Ministry of Finance. Okay, the Ministry of Finance is going to be getting appropriation from what? From government. So their revenue will be the appropriation from the government. So they'll be receiving some appropriation from the government because they are going to be relying on the national budget. So that one, we can also call that one grant, or we can call that one the what? Budget allocation, anyhow you want to call it, no problem. So they will be getting the, so someone can say subvention. So they'll be getting some assistance from the government, and they can also be generating some revenue on their own, which will be IGF. Okay, they can actually invest some surpluses. They can also dispose some of their assets, and they will be having some amount of money over there. So they are going to be having the money, the allocation, the national budget allocation, and they will be generating some of the revenue on their own. So those are called the IGF. Okay, if you come to their expenditure classification, is the same as this one. They are all going to be using the GIFMA classification. So if you come to the metropolitan, so you'll be having the metropolitan, the municipal district assemblies. They are also going to be having their revenue to be in three major ways. So we have the centralized transfer, which is the money received from the government, which some people can call grants, or so we call them decentralized transfers. They are having this money because of decentralization. So we call the funds from the government, the district assembly common fund, the sanitation fund, all those disability, some money will be coming to them. Okay, so government will be giving us some money that they will be using to carry out some of their projects. So we'll be having a decentralized transfer. Some people call it grants, no problem. And they are also going to be having the IGF. Okay, they are also going to be generating revenue on their own for their own operations. So they will be having the Sunwinning, the market tools, all those things. They will give you all those things. We classify them as IGF. We classify all of them as IGF, and they can also receive some assistance from others, donations, and what we call the gifts. Okay, so they can also have some issues of revenue from exchange transactions. Okay, they can also sell goods and some things. All those things will be classified as IGF. Okay, their revenue classification is like this, and the expenditure classification is the same as that of the central government, which is the gift-based classification. So they will still have the same classification. They can also ask you to do hospitals and maybe university or something like that. So they can ask you for hospitals, schools, or universities or something like that. Okay. So they can ask you for hospitals, these autonomous entities, schools or universities. They can do this one for you. Okay. They are also their revenue. They'll be having some So some of them they receive subventions from the government. They are partly financed by by the state, and they also generate their own revenue. So they'll be having the GOG subvention or the assistance that has been given to them by the government. They'll be having that particular assistance for the government, and they will be generating revenue on their own, which is the IGF. It is a hospital. They'll be selling drugs. They'll be doing consultancy, and they'll be receiving money. Okay, they will be doing checkup for people, and they will be receiving money. So they will give you those revenues. Okay, and they can also have what we call the grant donation from other people and other issues. Okay, if you come to universities, so they can give you a question for university like University of Ghana, UPSA, but they will not mention their names. They will give you some assumed names. They are also going to be having subvention from the government because the lecturers are paid by the state. So the government will do that transfer for them, and they will use that money to pay them. But the government will be paying them through their account. They are going to be treating that as revenue at the same time expenditure. So they will receive this subvention from the government, this intervention or this amount of money from the government. They also generate revenue on their own, which we call the IGF. So the academic user facility fee, the admissions, all those things the students will be bringing there. Okay, they can also sell an asset. They can also invest in other securities, and that will be giving their return. All those ones will be classified as IGF. So they can also have the issues of the grant, and they can have the donations, and also the issues of the gifts. Okay, they can also receive some gifts. Okay, some people, we can call something bequest. Someone can write a will that if I'm dead, 50% or 20% of my property should be given to the university. And the person is now gone, and the money will be coming in. That is a gift. Okay, that is a gift. So all those issues will be there. So they can actually give you question under any of these people. You just know the revenue and their expenditure classification in some workings. So we have done some of those things. Okay, so we are going to be looking at the issues of budgeting. Okay, the budgeting is not that complex as compared to those days. Now it's going to be about budget preparation. So it's not going to be about budget preparation, but we add the issues of preparing a budget to when we are doing the financial statement analysis, when we are coming to do ratios. That will be the last day. So we add the preparation of the budget to it, the working aspect of the budgeting, we add it to it. But today we are going to be looking at the theoretical aspect of the budgeting. So the budgeting now is going to be preparation, reporting, and all those issues. Okay, so it's not going to be like before. So you just have to know the budget, the importance of budgeting, the limitations, the approaches. You have to know them advantages and other issues, and also have to know the issues involved in budget preparation. What are the steps involved before a final budget will be coming out, before the budget will come out and government will start implementing it? What are the major issues there? What are the steps? What are the processes? And what are the activities involved in all those places? We have the budget formulation, the budget authorization, we have the budget approval, implementation, and also the monitoring or the reporting. So you have to also know that particular one. One interesting part is also the PEFA now. Now the PEFA, the calculation is no longer in public sector. You are now going to be doing the assessment. So they will give you some expenditure items or revenue items, and they will now give you something to score them. So we now do the scoring. It's a very important side now. The theoretical aspect has been moved towards to financial management, and we look at some issues of conceptual framework too. So the conceptual framework, you know your elements, you know the IPSAS, the reasons, the benefits, and all that issues. You also know the characteristics. The characteristics, they have a way of examining that particular one. They will give you certain items and ask you to explain which of the qualitative characteristics that are here and why are you saying that. So they'll give you statements like that and ask you to identify them. They can even present a financial statement to you and ask you to identify some of the qualitative characteristics that are affected by this particular one. So they can give you a statement where they will give you a budget information and then the actual. Comparability is there because you are now comparing budget with what? With the actual results. So they can also do something, the date, you have to check the date and also saying that if the date is what? The date is actually correct. They can also give you some information you have to see whether you can actually compare. The information is verified. They can prepare an account for you where it will not be signed. It means that there is no issue of verification or there will not be any footnote to the account. You cannot verify the figures in the what? In the statement. Verification can be done in two ways. You can actually recalculate the thing yourself, or you can actually ask someone to verify for you. The person is going to be the external party, who is the auditor. You can also add the figures back to check whether the figures that they are presenting is correct. That is also a verification. Or a third party will confirm for you, auditors. Okay, so they can actually give you, that is the way that they normally examine that particular side of it. You also have to know the measurement basis for assets and liabilities and their meaning. Very important. So those are some of the things that we are coming to look at this evening. So we are going to be looking at cash flow statements and cash flow statements. Then we will now look at the theory aspect. If we have time, then we go back to our the question number one to solve that question on consolidated fund. Okay, mostly the question has always been, most of their final account questions has been on consolidated fund than any other issue. The consolidated fund and then the district assemblies and those ones, they have more questions on them than the schools and the hospitals. Okay, so we'll be looking at the statement of cash flow. That is a question number two, and we see how we can actually go about this. This is about district assembly. We see how we can actually deal with this question. Then we can now move on to the theory, address some of them and see what we can do. Charles, are you there?
Hello, sir.
Yes, yeah.
Yes, please, I am.
So let's read this one. What are we doing first?
So you should prepare a statement of financial performance for the year ended, and then followed by statements of cash flow for the year ended.
Okay. So what you do is, please don't go there and be saying that you are doing final account first. Please, it will take your time. Okay. Do some things. Look for if
Hello,
you
sir.
have, yeah, senior.
Hello.
Yeah, I can hear you.
Please, can you increase your volume small for us? Your voice is a bit down.
Then it might be from your side because other people can hear me.
Okay.
Okay.
It's actually low.
Then it might be from the two of you your side. So it's either you increase your volume or because I'm actually speaking louder. Okay, so yes, some people are some people can actually hear me loud and clear. So it might be from your side because I'm actually speaking on the, I'm actually speaking louder. Okay. So just, okay, I was saying that don't go there and say you are doing final account first. It will take your time, please. It will take your time. So what you do is just go there, just identify where where you can get your 50 marks. Okay. So go and work for, let's say, 30 something or 40 something marks. Then you can now come to the final account. But for me, okay, because of my speed, I can do final account first. But I don't know for you. Okay, I'm saying this because of your speed level. But if you have your speed is very okay, then you can start with the final account. I don't have any problem with that. But because of the speed and because of the time that this will take, okay, go if you can do other ones, let's go and do them nicely. Then you can now come and waste your time on the what? On the final account. You can be on it and they will say stop work. You can, if you know you have other questions that you can answer very well. Okay, which are theory right now. The theory is like 30 something marks. The calculation will be like 60 something. So yes, if you have other questions that you can answer very well without wasting your time, okay, please tackle them. But if you have if your speed level is very high, okay, you can also do the final account as a first question because the time that I was writing the public sector, yeah, final account was the second question that I've answered because I know my speed. Okay. So, but if your speed is very low, if you are writing, you have to write one thing, you have to turn the book, you have to punch the calculator like you are playing with the calculator, please. Final account as a first question is not for you. Okay, but if you know yourself, then you can pick any of them at all. But I'm saying this because of the time that you are going to be wasting on it. If it should be the first question that is going to boost your morale, then go ahead and do it. But make sure that you have done it within the shortest uh possible time. You should not spend more than 1 hour. If you spend more than 1 hour, then that means after that you are frustrated. You'll be automatically be frustrated. So that is it. If you have the speed, fine. If you don't have the speed, then you can leave it, do other ones, then you come back to it. Okay. We are doing statement of financial performance. So if you are in the exam hall and they ask you this one, please, you know the entity that you are preparing this thing for. Okay, we are doing this for district assembly. So what we do is we have the statement of financial performance here. As at 31 December 2018. Okay, so you put the name of this one there. I'm sure it's Elmina or something. Okay, so what you do is you know your classification of these people, their revenue already. You know how the revenue will be classified. So you just come here, you have your revenue, you put the items here, you have the decentralized transfer because it's a district assembly, they'll be receiving some amount of money from the government. So you come to their IGF, internally generated what? So you come to their IGF, which is the internally generated fund. Okay, they might be having some grants, donations, and gifts. Okay, so for this one, you just do it here like this and move on. Come to expenditure. Okay, just you know the expenditure classification already, so just put the items there. So you have compensation for employees. You have use of goods and services. You are going to be having interest. So they might also be having some bank loans over there. They are going to be paying interest. Please, the interest doesn't mean that it's only the government that will be borrowing and be paying interest. These people they can have bank interest. Okay, so you count to they'll be having fixed assets. So you count to the consumption of fixed capital. Okay, consumption of fixed capital. They might also be having some issues of they can also be having maybe mostly they don't have subsidies, but they can also be having subsidies. So you just put it over there. If they don't have any, you put dash there and move on. So you can also have something like social benefits. They can carry out some some interventions for the people within the district. So they can also have, maybe they can give assistance to some people like in form of grants, and they can also have the other expenditure. Okay. So for this one, you are actually done with this one. The cash flow statement. Okay. You can leave this one small, or you can leave a space for the cash flow statement. The cash flow, we use the direct method. For the public sector, we cannot use indirect method. They are not profit making. So what we do is that for the cash flow, we still repeat these items like this. They are the direct items, operating activities, the same items that we are going to be repeating, but we repeat those that are what? Those that are paid in cash or received in cash. So depreciation will not be part of it. Consumption of fixed capital, because it's a non-cash item. So the operating activities, you will still repeat these ones, but consumption of fixed capital should not be part of it. So you have this one now. So I can leave a space like, let me see, 1, 2, then I can actually do, so maybe I can divide this one and do my cash flow there. So let me see, 1. So let me come to B over here. Let me come to my cash flow statements. Cash flow statements. Cash flow statements for the year. For the year ended, you put a year there. The name of the entity is very important. So you count your operating activities here. So operating activities, you still be repeating those revenue and expenditure items. So consumption of fixed capital should not be part. So I can leave 2 space over here. Then I can now go to, okay. So I can now count my workings here. Okay, so the workings, nobody's asking you no to the account. So if they have no to the account, then you just write those accounting policies and those things. Okay, compliance with what? Compliance with or compliance. Okay, so compliance, you say that this financial, you just copy the first note that will be given to you over there. The financial statement of the entity has been prepared in accordance with the Public Financial Management Act. The first footnote there, just copy it there. Okay. But you come to the basis of accounting, you have prepared a financial statement on a accrual basis. Okay, then you come to the inventory valuation and other issues. You just see how the assets have been consumed, how certain assets have been measured, and other issues. So for this place, we can actually, okay, so we can show our workings. We are not doing any notes here. So we can have our workings here. Okay, I've forgotten to add notes here. So most of the time we add a note over here to show where the person can actually get the workings relating to that particular one. So you can also put notes over here to tell the person where they can, because you are adding 2 or more figures together to get a final one. So where can the person allocate those one to give you ticks? That is it. Okay. So let's come to the first one to be the decentralized transfer. So you have the decentralized transfers. Okay, so you leave a space. You can come to the internally generated. Okay, the IGF will be their major source of what revenue. So you can leave a space, plenty space for the IGF, because it's going to be their major source of revenue. So the IGF 1, 2, this will be okay. So I can come here and have grants. So I'll check whether grants, donations, and those things are there. These are not going to be plenty. So I can leave a space here and move on. So I can come to the number 4 over here and have compensation for employees. Compensation for employees. So I will do this one, the workings also over here. This one will also be plenty small, but it will not be plenty as what? Use of goods and services. So you can also leave some space over there. Then you come to, let's say, that will be 5, use of goods and services. So this one is also going to be plenty. So you can come to 7 over here. If they have any interest, that is fine. You put the interest here. So consumption of fixed capital, you have to calculate depreciation and some other issues for them. So you have the 8 to be consumption of fixed capital. Since this is district assembly, so you have to now leave a space for the subsidies and other ones. If we have any of them, we come and put it there. Some of them we might not be doing workings for them. It will be a straight item that we are taking. So just can we now move on? We're taking the items one by one.
Okay, so first item is dividend received.
That will be under what?
IGF.
Okay. So we have taken the
IGF.
first one to be what? IGF. Okay. So we have the dividend received over here. Dividend received. Their figure, is it in million or?
Yes, 3 zeros are held up.
Okay. So how much is the figure there?
93,250.
93250. Okay. What again?
Central government salaries.
Okay. So what would they go?
Decentralized transfer.
Okay. So that is too much. One. So central government salaries. How much is it?
12 million. Even though 3 zeros are held up.
Okay. So 12 million.
Yes, sir.
Okay. So the next one is what?
Basic rates.
Basic what? Where will it go?
IGF.
Okay.
IGF.
So the workings is very important. It's more important than what? Bringing the items to the statement there. That this will give you more ticks than what you are coming to do over there. Don't be frustrated. Okay, just take your time, small, you go. Basic rate is what?
370,900.
300 and
70,900.
okay. So the next one is what?
District development facility.
That will go where?
Centralized transfer.
Okay. So district what? Development what?
Facility.
Okay. So this is where the people have been getting their 10% from. How much is it?
15,600,000.
So 15 million. Transmission like someone who is not in accounting class.
15,306,000.
Okay. Like this.
Yes, sir.
15,600, isn't it?
Yes, sir.
Okay. The next one is what?
Rents from land and building.
Where?
IGF.
Okay. Rent from land and what? Land and building. How much is it?
6,120,800.
6,120,800.
800.
Okay.
Established posts.
That will be,
Compensation.
so we have the established post over here to be
1,140,700.
11.
40,700.
Okay. The next one is what?
Other expenditure.
So other expenditure, I'm not sure there will be any workings to that one. Okay. So we can actually bring our other expenditure. I'm not sure there will be any figure to that one, but you can actually try to read a footnote and see. So some of the expenditure, you just send them like that. So you just come here as per the statement. That is not the trial balance. So as per the statements, how much is it?
600,000.
600,000. So this one we are solving it in class because, but if you should be in exam hall, what you do is you go through the footnote to see whether you have any owings or prepayment on the other expenditure. Since you are doing cash flow, you just go there, look for the other expenditure, check whether there is any prepayment. So just take if you have a prepayment, it means that you are going to be taking the full amount. You have paid the full amount. You are looking for the cash paid, so you have paid the full amount. But if there's always, it means that you haven't paid the full amount. So you have to go and subtract that particular one from it. Okay. So that's how we go about it. That is the other expenditure. The other one is what?
Allowances.
You didn't mention the non-established post.
Sorry, non-established post, 580,000.
So we have the non-established what?
Post.
Post. 500,000.
580,000.
Okay. 580. What again?
Allowances.
Okay. The allowances, they didn't say anything, isn't it?
Yes, sir.
Okay, just treat it as compensation for employees. Some of the allowances can be what? The assemblyman's what? Or assembly members' allowances. Those people are not employees. They are doing administrative work. So the allowances are treated as use of goods and services. But this one, whenever they are saying allowances and they are not specific, just treat it as what? As the allowances to the employees. How much are they having there?
390,470.
90.
So that will go to compensation, right?
Yes, please. Okay. 390.
470.
470. Okay. Next one is what?
Court fees.
Court.
Fees.
Where will it go?
IGF.
Okay, let's check whether the court fees, whether they just say court fees, isn't it?
Yes, sir.
Assembly. Why they should not make it debit and credit? Okay. Okay. So the court fees, okay, this court fees is what someone can say that let's come here. We have some those courts, those people that we have, they have some, is it magistrates or something like that? We have some of them at the district. Are they under the district? When they receive their money, will they go to the district?
Yes.
Those they have, I don't know how they call them. We have some small
common.
ones that you go. Okay. So this one is possible to be a revenue than expenditure, because where would the districts, when are they going to be, when would they go to court for any expenses? So this one is closer to revenue than the expenditure. So this means that they are receiving some people are going to the court, the district court, and they are receiving some money there. So that would be an idea, a very interesting one. So court fees, like they made it debit or credit, that one, you know that would be expenditure or revenue. So we treat it as what? As IGF. How much is that?
240,000.
240,000. Okay, what again?
Inventory and consumables.
That will be under what?
Goods and services.
Okay, so we have inventory and
Consumables.
okay, that is how much?
800,000.
Okay. Okay, the next one is what?
Sanitation fees.
So sanitation fees is also going to be IGF, isn't it?
Yes, sir.
Okay. Sanitation fees. If they say sanitation levies is better than the fees, the assembly can also pay the fee. Okay. So sanitation fees is how much?
370,000.
370,000. Okay.
General
Next,
cleaning,
it will be under what?
goods and services.
And services.
So we have the general cleaning. It's a minute there. Someone is saying that why is dividend received not other income? We don't have other income over here. So it's only IGF, any revenue that they are generating from utilizing their own resources. They are all called internally generated what? Fund. How are they receiving the what? The dividend. They are receiving the dividend by using their what? Their resources, their internal resources to invest in that particular one. So that particular dividend is from what? Investing the internally generated what? Resources. So we have the what? All those ones are going to be classified as what? As IGF. Okay. So Charles, what is the next one? General
General
cleaning.
cleaning,
Yeah.
350,000.
350,000. Okay.
And common fund,
Common fund will be what?
decentralized transfers,
Okay. Common fund. That is how much?
2930, and then 1,000.
29,000.
30 small.
Okay.
Social benefits,
So social benefits, I don't think there will be other items. So you just have to go scan through and bring it over there. So I'm not sure there will be an issue of any footnote on the social benefit, but you can just write the figure over here as per statement. How much is it?
840,300,
840,
300.
300, like this.
Yes, sir.
This one, the money will not go to the people, but they will take some things and include it over here, and they will just have some low receipts. The auditors will go there. They will give them something small, and all those issues will be there. Let's move on.
Equity investment acquired.
So that is a capital what? Expenditure, isn't it?
Yes, sir.
So you can go there. You can go to our cash flow now. So the cash flow will be having operating activities. We recopy all those issues now to the cash flow. So I'll be having the decentralized transfer here as revenue. So you still have the revenue and expenditure here. So you copy all these things one now again. So you have a decentralized transfer here. You have your IGF. You have your grants and other issues, donations, and gifts. Okay, so you count your expenditure here. So the expenditure, you have your compensation for employees. We come and recopy those ones, so that space can be okay for it. So we come to our investing activities. So you have your investing activities over here. Then the acquisition of what? Acquisition of equity what?
Investments.
Okay. Acquisition of equity investments. So now how much is it?
420,000.
So 420,000. So that will be an outflow, isn't it? So they are going
Yes,
to be
sir.
spending this amount. So you just put it over there as the first investing activities. Let's move on.
Infrastructure, plant and equipment.
Infrastructure, plant and what?
Equipment.
So we'll be going to see whether they have acquired some or is the old one. Is there any date added to that one?
No, sir.
Okay, we'll be going to see whether these are things that happened during this year. Okay, so okay. So they have to add date. But if no date has been added, then it means that all those things happen this year. Do you have any? We don't even have anything on depreciation, isn't it?
No, sir.
Or this one, they're supposed to give us some notes to that one. So it means that there will not be any depreciation. So since there's no note, it means that all these things has been acquired this year. Infrastructure, plant and equipment, work in progress, loan received, interest expense, advance to staff. Okay, so nothing has been given about those things. Then it means that all these things are happening, or all are the issues for this particular year. So let me read the top there again. They have to give you some information on the. Okay, so this is for the year. The following details relate to the listing for the year. So the infrastructure plants are also going to be acquired this year. So you have to assume that they are all acquired in this year. Okay. So infrastructure, plants, and what?
And equipment.
How much is it?
980,000.
980,000. That would be an outflow, isn't it?
Yes, sir.
Okay. What again?
Work in progress.
Work in progress will also come here as investing. So we come to work in progress as what?
490,000.
Okay, 490,000.
Loans received.
Loans received, it will go where? Loans received will be for which one?
Financing activity.
Okay, so we come to financing activities over here. Financing activities over here. So we have loans received. How much is it?
2,330,000.
Okay, 2 million.
330,000.
Outflow or inflow?
Inflow.
Inflow.
Okay, 2 million. Just mention it again. 2 million.
2,330,000.
Okay. This space, the space will not favor, but let's be moving.
Say 2,330.
233.
10,000.
Okay.
Next is interest expense.
Interest expense. Okay. What do you have the interest expense? You have it somewhere. Okay. As per the statement, how much is it?
200,000.
200. Okay.
Advances to staff.
What will it be? Advances to the staff. Where will it be?
Financing activities.
Hey, just what are you financing?
Yeah. Maybe they'll charge interest on them or something.
The interest expense, where did you put it?
I put it under interest.
And interest expense.
Just
Okay.
the advances to the staff will give them what? Interest, isn't it? Will give the interest income, isn't it?
Yes, sir.
Okay. When do you receive interest on something? You're investing, isn't it?
Yes,
When you
sir.
invest.
Okay. So that advances are always treated as what? Investing activities. So advances to staff. How much is that?
660,000.
That will be an outflow, isn't it?
Yes, sir.
Yes, please.
So 660,000. Okay. Let's move on.
Royalties.
Royalties will be
Add flow.
okay.
Oh, okay.
Royalties are just those people, they will be paying something to maybe some people are now using the land and those things, they have to pay part
Oh,
to
okay.
or the government can actually give the state, the land is for the state, but the government can give portion to maybe those mining companies, and they will pay royalties to the government. The government will also give a share to the district assembly, or the district assembly can actually give a land to somebody, and the person will be paying what royalties for using the land and all that issues. So that the royalty will be an IGF. Charles, how much is it?
430,000.
Okay, 430,000. Okay. What is the next one?
Consultancy's cost.
So what will be that one?
Goods and services.
Okay. So consultancy cost. That is how much?
470,000.
470,000.
Training and workshop costs.
Where?
Goods and services.
Services.
Training. And this one is not difficult, but the time, like they should reduce it for you small, maybe you can actually get all of them. All these amounts,
275,000.
275 or 3.
275.
Okay, 275,000.
Transport and traveling.
That will be
Also goods and services.
Services.
okay. Transport and travel and transport. Sometimes if you don't know how to classify a place, if you don't know how to classify the expenditure, mostly it's going to be under goods and services. So if you don't know how to classify, just put it under goods and what services. If it's not relating to employees, it cannot be under compensation. So it is likely to be under use of goods and services than the other ones. Okay, but if it is about provision for bad debt and other provisions that you are making, that will be other expenditure. Okay, Charles, how much is the travel and transport?
620,000.
620,000. Okay,
Consumption of fixed assets.
so they have given you that figure already, isn't it?
Yes, sir.
So as per the statement,
Yes, sir. 960,000.
960,000.
Special services.
Where will you go?
Goods and services.
Special what?
Special services.
Okay. This one, you see, sometimes this one, if they should make it to be more simplified than this one, special services. Okay. Let's put it under goods and services. What are they saying the special services now? Okay. Use of goods and services, no problem. Special services.
820,000.
820,000.
Utilities.
Utilities will be under what?
Goods and services.
Okay. That will be how much?
630,000.
630,000.
Market tools.
That will be
IGF.
okay. So market
870,000.
870,000.
Permit fees.
That will be
IGF.
okay. How much is it?
990,000.
990,000.
Fines and penalties.
99,000.
990.
Okay. Fines and what?
And penalties.
That will be
Also IGF.
okay. Fines and penalties. That will also be IGF. What are you having?
330,000.
330,000. Okay.
Development bonds issued.
Development bonds, what?
Issued.
Where will it be?
Finance.
Financing activity.
Financing
Okay.
activity.
That is a bond. Anything about if you are issuing loan and all those things, why are you issuing it? To what? To be able to get money and carry out your operations, isn't it?
Yes,
So
Yes,
that will
sir.
be about financing activities. So development bond what?
Issued.
So if you have anything about issuing of a security, but if you are buying the security, it means that you are doing investment. But if you are issuing, it means that you are looking for money to what? To be able to carry out your activities. So that will be development bond issued. How much is it?
1,300,000.
1,300,000. Okay.
Postal license.
Postal
License.
where?
IGF.
Okay.
630, 920.
Okay. 630,
920.
630, 920.
Business income.
Business income where?
IGF.
Okay. How much is it?
2, 300, 600.
2, 300, 600. Okay.
Chopper license.
Which chop bar? Okay. So chop bar people too, they get license.
yes.
So where are those money going? Because me, I haven't heard about that one in my constituency before.
IGF.
Just how much is it? Let's leave politics here.
300, 400.
Okay. 300, 400. Okay.
Proceeds from sale of equity.
Proceeds from sale of equity. Where will it be?
Financing.
No. Proceeds
Investment.
from
Investing activity.
proceeds from
Proceeds
sale of what?
Equity.
Equity.
Proceeds from sale of equity. Okay. The equity,
Financing.
we are not the one. We are not the one issuing. That we have acquisition of equity. Acquisition of what? Acquisition of equity investment, isn't it?
Yes, sir.
So we are selling part of our equity investment to other people. So we are not issuing the equity investment because the equity who can issue investments?
Senior, come again.
Who can issue equity instruments? Equity
The company.
Yeah, equity
the-
instruments are issued by companies. This is a public sector.
Yeah.
So they don't have you cannot buy anything to become what owner. No, they don't trade. So equity instrument, that's something that will give you ownership. It's only companies that can issue what this instrument. So you cannot be a financing. If you should be a private organization, then that would be what? That would be a financing, sale of shares. That would be a financing. But we are buying the equity investment and we are selling. So we are selling part of our investment. So that would be proceeds from sale of what? Sale of equity what? Investments. Charles,
So that
how
will
much?
be
990, 320.
Okay, 990,320. That will be an inflow. Money is coming in. That will be hitting, that will be increasing our cash balance. So that is positive. What again?
Accumulated fund.
Ac-
1st
ac-
January
ac-
2018.
Forget about that one. That is the starting the surplus that they have over there. The surplus is not going to be this one. Okay, surplus will not come here. It's statement of financial position item.
Herbalist license.
That will be
IGF.
okay. That will be IGF. So herbalist license. How much is it?
530, 370.
530, 370.
370.
Okay.
Cash and cash equivalents.
Look at the figure. See, that will be opening or closing balance, any of them.
that will be opening.
Opening.
Okay. So then after we are done with the cash flow, then we add it to the net cash flow for the year, isn't it?
Yes, sir.
Okay.
Stool land revenue.
Stool land what?
Revenue.
That would be what?
IGF.
IGF.
So you have the stool land revenue. What are you having?
600,000.
Okay.
Lorry park fees.
That would be
IGF.
since the IGF is the space is not big. Okay, let's move on. How much is it?
720,400.
720,400.
720,400.
Okay.
Market store rent.
Okay, so I have to bring those one here. So I need to have the two over here now. That's the internally generated was generated fund. Okay, so market store what?
Rent.
Okay, so that will also be IGF. So some people they will put the structure there and then they will range it out to what? To the market people. It will be the assembly that will be taking that money. How much is it?
300, 750.
300.
750.
Okay.
Recoveries.
Recoveries will be what? What are you recovering?
Financing as inflow.
No, that's not financing.
No, it's investing, sir.
From the profit and loss.
Yes,
So
that is the recovery. So the money that you are
Yes, sir.
giving to the employees, you are recovering some of them. So that will be under investing. So you have
Oh,
recoveries. Okay. How much is it?
194,000.
194,000. So that will be
inflow.
inflow, yeah.
Loan repayment.
Loan repayment will be what?
Financing.
Okay. So
Financing.
loan repayment. Okay. So we have the loan repayment. How much is it?
143,000.
143,000. So that will be
Property rates.
property rate.
Outflow.
Maybe. Okay. Property rate will be IGF. The stop work produce permit. Is it the assembly that they have been writing that particular thing, or they have a special department for that?
With the assembly, there is a
That
department within the assembly that does that.
K something. They have been writing KM or something like that. Produce
It's
permit,
KMA,
stop work, produce permits by
KMA,
K
KMA,
something.
produce permit by KMA.
So it means that if I want to build in my community, to
If you
have to
want
go
to
and
build your house, you have to go and take permit.
the land that is for me.
Yes.
Hey, let's move on. Property rate is what just. Hey, my own land.
820, 900.
Hey. Hmm. No, recovery is not interest received. Okay, that's why you are thinking. I think recovery is like interest received, so it should be. No, if you are thinking, then you don't your point is not strong. Recovery is the loan. Okay, if we have loan recovery, so we have department that is like quick loan, they have recovery department. What is the recovery? So the loan that has been given to the people, they try to recover some of them. So it's the loan that they are recovering. Okay, it's the loan that they are recovering. Okay, so it's the loan that they are recovering.
It's the accumulated fund. How did you treat it?
No, it will not. It's a prof. It's statement of financial position item.
So it's not supposed to come in either the cash flow
Yes,
statement.
please. Yes, please. Okay, someone is asking why the stool land revenue is not under decentralized transfer. How is it collected?
So I was also contemplating on why you brought it as an idea, because stool land revenue is taken into the central government coffers, and the central government send portions of the monies that has been received as stool land to the chiefs, and also send sums to the district assembly. So it's in the form of decentralized transfer. It's not the assembly that
So is the government,
actually
everything will be, even if they are doing whatever they are doing in the community, they have to pay to the government before the government will share.
I don't get what you just said.
So I'm saying that if the where the government is getting the revenue from, even if they are deriving the revenue from the community, the person that is going to be paying that has to pay to the consolidated fund that the government will not transfer to.
Yes, because you know, stool land is a whole entity on its own
Okay.
that collects that revenue on behalf of government. So the district assembly does not involve itself in collecting stool land revenue.
Okay, so it's collected on their behalf and disbursed to.
Yes, and then
Okay.
send portion, a percentage is sent to them.
Okay. Okay. Thank you. Okay. So we have the stool land to be 600,000 here. All right. Thank you, Sinan. So let's move on now.
So that was the last item.
Which one? The recoveries.
The property rates.
Okay. That is the last one.
Yes, sir.
Okay. Put these figures together. Let's see.
The property rates figure has not been captured.
How much is it? Just
820,900.
820.
900.
Okay. Take the lorry park fees again. How much is it?
720,400.
Okay. 720,400. Okay. So we are doing compensation for employees will be only 3.
Yes, sir.
Okay. How much is that? The use
2.
of goods and services is also the interest. So let's go there. Let's go to, so interest is how much? Interest. So interest, there's no,
200,000.
so 200,000 as the interest. Other expenditure is what? There's no items for that.
600,000.
600,000. Okay. So we can't see,
Social benefit.
there's nothing like grants, isn't it?
Yes, sir.
Social benefit is how much?
840,300.
840,300. There's nothing like subsidies, isn't it?
Yes, sir.
What about the consumption of fixed capital?
960,000.
960,000. Okay. So, okay, let's bring the compensation for employees here. So this is the cash flow. So we have use of goods and services. So we have use of goods and services. We have the interest. The interest is how much? So you can bring this one straight forward. How much is the interest?
200,000.
Okay, 200,000. Okay, then we have other expenditure, isn't it?
Yes, sir. 600,000.
Okay, 600,000. Then you have the social benefit, isn't it?
Yes, sir.
Okay, how much is it?
840,300.
840,300. So let's go and add the remaining workings now and bring them. So let's come to the decentralized transfer. What are you having? The total is what? IGS.
305340.
30.
53 then 4 zeros.
So 530,600.
I'm having 30,530,600.
Yes.
Okay. I'll show you how to also add this one without stressing. Okay. The figure, don't go and be punching the calculator to add. Okay, come here. If you look at this figure, you can still keep 3 zeros from them, isn't it? If you look at the decentralized fares, you can the fees over there, you can still keep 3 zeros by if you want to add, isn't it?
Yes, sir.
So you can have 12,000 here, you can have 15,000.6, you can have 2930, and you can have 600. Then you add and multiply by the 1,000 that you are keeping. So that is the figure that you have. That will be so that will be note 1. So I have the note over here as note 1. So note, that will be note 1. So we have 30. So I have note over here. So let me bring that note here. Then the notes should come here. So we have note 1, 30.
50. So 30,530,600.
Okay. We have 30, 530, 600.
600.
So let's go and add. Please don't go and waste time on the IGF. Okay. Come and add those that you can easily add. There's nothing like grants and donations, so we cancel this one. Let's come to compensation for employees.
2111170.
211. The ones are 3.
4.
Okay. 70.
Yes, sir.
Okay. So your compensation for employees will be the note what? That will be note 4. So we have note 4. That will be 2111170. You go to your statement of financial performance, you have your note 4. So this will be note 1. This will be 3. Okay, this will be 30,530,600. So your note 4 now, you'll be having 2111170. So let's go to the use of goods and services. There is nothing for this particular one. Use of goods and services. What are we having?
396530.
39.
65. Then 3 zeros.
Okay. 3,965,000.
Yes, sir.
Okay. So you have use of goods and services. I'm sure that will be working 5. So 3,965,000. Okay. So we have 200,000 over here as the interest. Okay. So we go to this one over here, note 5. That will be 3,965,000. So we cannot have time for the IGF now and add. But if you know that will take your time, you can just leave it and move on. Okay. After bringing these figures now, you are good to go. You don't have to actually waste your time on those issues. Okay, so let's go and put our IGF together now and come back. So what will be the total of the IGF?
15419290.
15419290.
9290.
Okay. 15. Okay, so we
41
have
9290.
so 154192.
90.
Okay, so we come to this one. So we have the IGF. Just mention it again.
419290.
9290. What will be the total if we put all of them together?
For the revenue side, I'm having 45949890.
45949890.
90.
Okay, let me just do it. I have total revenue here. So 945.
949890.
Okay, 90. So let me just name that one total revenue. Okay, total expenditure.
I'm getting 7516470.
Okay, someone should confirm that. Let's move on.
Add the
I haven't added these ones.
consumption of vision, how do you call it? Fixed assets. Can you go to the next sheet? I think it's 960 now.
So I'm having 8676470.
Sarah,
Okay, 86.
76470.
What's the
86. Someone is saying that revenue is 459450. 45949850. Can someone confirm that?
Yes, it's 45949890.
Is it 90 or 50?
90.
Okay, so the person that is saying that particular one should do the addition again. So 86, just mention this one. 86.
8676470.
Okay, 8676
470.
47. Sorry, 470. Okay, so
867?
okay, this one is just a matter of adding and subtracting. Okay, so that is not the purpose for this one. But I want to say this one. Okay, you see sometimes they can give you other footnotes. So the other footnotes, they will be giving you some owings. You'll be considering the owings for the statement of financial performance. So they can say that owings of 10 million is due to what? Is due to the post or the established post workers. Okay. You see that owings is not, you haven't paid. So the owings will not be part of the what? Of the cash flow. But you are going to be capturing the owings as part of your what? As part of your compensation for employees. That will be going to profit or loss or statement of financial performance. But if you are coming to, there can be a situation where you see this particular figure that you have over here, the internally generated fund, there can be some owings or advance payment over here. For advance payment, you have actually received that money for that year. So it's a cash received for that year. But the owings that you are here to receive, you have to take them from this total. So what are the owings that you have captured? Owings are not cash. Okay, owings are accruals, which you are here to receive cash for it. So what is the cash revenue received? What is the cash internally generated fund received for the year? So you take the owings from the total amount. Then you have that particular one will give you the cash. The compensation for employees over here, there can be a situation where there will be some outstanding what? Outstanding salary over here. So let's say the outstanding salary is actually 10 million. So we have written 10,000 over here and we added it to this one. If you are doing cash flow, you don't have to send the total, which is including the owings, because the owings, you haven't received that particular amount. So you can't capture as part of the cash that you have received for the year. So if you want to know the total amount, you just take the owings from the total compensation figure that you have, then you capture that one. Okay, but this one, we don't have access to those ones. They can actually give you a footnote and they will ask you to what? To do the cash flow and also the statement of financial performance. You only capture it just like a cash book. You only capture those items that you have received cash for and those items that you have paid cash for. Consumption of a fixed capital is not going to be appearing in our cash book. No, depreciation can never appear in our cash because it's a non-cash item. It's a non-cash item. So that is how you if you are giving a footnote to know whether there is a prepayment, we don't do anything. If you count to prepayment, you'll be taken away from the item that you are receiving the money for or you are paying for. But if you go to the cash book, you have received a total cash of that amount for this year. So you receive the actual amount that you should receive plus a prepayment. The prepayment was not received in the subsequent year. It has been received in this year. So that total amount will be the cash that you are going to be recording in your cash book. So the full amount have to appear there. So if you have other expenditure, okay, so let's have other expenditure. The one given to you, okay, the one given to you, let's say as per the statement or the trial balance, okay, as per the statement. So this is an assumption. It is 250,000. And the question is saying you that included in the other expenditure is a prepayment or is an amount paid in relation to what? Okay, they will say in relation to, included in this amount is what, 70,000 paid in relation to the what? To the following year. Okay, if you are going to your statement of what? Statement of financial performance, you are going to be taking your prepayment from this one as 70,000. So you are going to say that the only expenditure you have to take to this particular year is 180,000. But if you are going to the cash flow, you haven't paid 180. You have paid 250. It is a 250 that you have recorded in your cash book. So you record all the full amounts paid for this year. That is the cash that you have paid for this year. So it will appear as a cash flow, not the 180 that you are taking towards or statement of financial performance. So you always have to pay attention to this one if they are doing issues of cash flow. So you have to just add your cash balances, you add and subtract. So you'll be having the one from the operating activities. Then you come to investing activities, you add financing activities, you add. So you add and subtract the balances for the three levels, the three activities. Any one that you have, you bring it over here as the cash for the year, and then you add your cash balance to it. So the net amount that you are going to be receiving is the cash movement during the year. That is before you have actually what touched the cash that you have at the beginning of the year. So you just want to know what will be your cash balance. So the cash movement, you add it to the balance that you have. The cash movement, if it's a deficit, you subtract it from the balance that you have at the beginning. The one will give you the what? The closing balance. It's just like the normal cash flow. Okay, so this is how we go about it. It's a very simple exercise over here. All right. So let's see what are the things that we have to do again. Okay, let's see if we can now tackle some of the theory questions. We have time. We come back there. Just budgeting and PEFA, 20 marks.
Okay, budgeting and PEFA.
Yeah.
Question number 3. Please, there's a hand up.
Yeah, Abdul
This
Basit.
I have a question. Please, with respect to the current explanation that you were giving and the current question we just saw, you realize that they requested us to prepare statement of financial performance, and you explained that should there be something like owings and owings, yeah. So the owings will not reflect in the statement of cash flow because it is a non-cash item.
However,
I get that is right, but in the preparation of the statement of financial performance, won't it be considered?
Yeah. That's why I said that you add the owings, but if you are going to cash flow, you take it out. So I've done some illustrations to the compensation for employees.
I think I did not hear that part. Okay. That's why I'm thinking. Thank you.
All right, Senior.
So, Senior, so the other expenses will not be added to the cash flow, right?
We brought all of them there. We assume that they are all cash items. So let me see. So you can see that we brought all of them here.
All of them here. Okay. But you were talking about if there is a advance.
Yeah, the advance will still be captured. The total amount that you have paid will be captured. But if you are taking to profit or loss, you will not take it from the figure that you have paid.
Oh, okay.
Okay. But advance, what is the full amount that you have paid? The total amount that you have paid, that is the amount that you have taken from your cash. So that is the cash paid for that one. So the advance, including the actual amount, will be there. But if you are going to statement of financial performance, it means that you are here to incur some of the services, but you have paid for it. So you have to now take that one to the subsequent year now. Okay. It can be an issue like that. But the question that we are solving, there's no issue like that. Okay. So I'm just drawing your it's just something like I'm giving you
so like for example, so we have the other expenses like this 100,000. So if we pay let's say 100,000 in advance, it means that we will record all the 600,000 at the cash flow, but in the performance you will record it as 500,000.
Yes,
You will
please.
take that out. Okay.
Yes, please. Yes, please.
All right,
Okay.
sir. Thank you.
Okay.
Okay.
So what about income, arrears, and advance? The same thing. How you go about it? If it is in arrears, you haven't received it. But if it is income, you have received the full amount. So the full amount will be shown as what? As the income received. We are looking for cash, not profit. So you show the full amount that you have received from the revenue in advance. So if the person is paying you 30,000 and the person is supposed to pay you 25, you have received all the 30,000 and you have recorded all the 30,000 in your cash book. So we are just saying that what is the cash received for the year? You bring all the 30,000. But if you are going to statement of financial performance, the revenue for this year is 25,000. So you will report the 25,000 and now show the 5,000 as well as payables. Okay. But for the cash, we record the full cash.
Okay.
We record the full cash. Okay. That the full amount will go to your cash book. Will go to your cash book. If you are recording, if your tenant is paying you 30,000 instead of what? The tenant is paying you 30,000 for 2 years. Are you going to be saying that you have received 15,000 for only this year and then he will come and pay the rest of the 15,000 in the following year? No, you have received all the 30,000. So if you are preparing your cash book, all that is the cash that you have received now in your hand. But in terms of revenue recognition, you record the revenue, you recognize the revenue 15,000, because for this year, you are to end only what? Only 15,000. But the person has paid for 2 years. But you have received the cash today. So that is the amount that you are going to be putting in your cash book. So that one, the full amount will come. In terms of the revenue recognition, that is why you try to look for the actual revenue that should be recognized for that particular year.
All right, thank you.
All right. So the PEFA, we are saying that for PEFA now is going to be only what? Only computation of what, or how to measure assessment of some of the items. And this is how you are going to be seeing the question. Okay. So we are going to be taking our time to go about it. And this is how it will be.
Senior Principal, I think with the PEFA, you were saying something like the theories are out now.
Yeah, the theories are sent to financial management.
So there will be no theory question on the PEFA.
No. Even if they want to ask you to be relating to that, so maybe you have measured, you have assessed some of the things, and they will ask you how to improve upon that particular assessment. That is what they will ask you. But there's nothing like the pillars of PEFA. No, those things are not coming again. Okay, those things are now in financial management.
Okay.
Okay.
Only the computation.
Please, can you stop your video?
Can we proceed?
So now only the computation that will be we should expect.
Mega.
Yes, please.
Okay, sir.
Okay, I'm coming. They say someone's video is on.
Please, can you people put her off?
Yeah, it's off now.
Okay, thank you.
What is happening there? Can you share your experience with us?
It's fine. It's off now. Thank you.
Okay.
Okay, so question number 3.
Okay.
That's budgeting and PEFA.
Okay.
Accounting and reporting is a major pillar in public financial management under the PEFA framework. Indicators of effective accounting and reporting are financial data integrity, in-year budget reports, and annual financial reports. A recent evaluation of the accounting and reporting system of Ghana is presented below. So we have the indicators over there, being financial data integrity, in-year budgeting reports, and annual financial reports with M2, M1, and M1 under them. We have their dimensions and their scores for each of their dimensions. Required. A. Compute the score of each of the 3 indicators of accounting and reporting pillar of the country using the appropriate methodology of PEFA. B. Based on your results in question I above.
It should be A.
Okay. Question A above. Prefer 4 ways by which accounting and reporting elements of public financial management can be improved.
Okay, don't be confused with this one. They're just saying provide or recommend any. So even if you don't understand what they are saying, that particular word, okay, you just look at, okay, they say 4 ways by which accounting and this one can be improved. So it means that maybe it is bad and they're asking why that particular one can be what? Can be improved. Are you okay? So it's not any issue that you have to be okay, it's not any issue that you have to be actually be thinking about or saying that okay. Okay, so let's come to let's say accounting and reporting, uh, financial integrity, in-year report, and annual budget. Okay, accounting indicators of effective accounting and reporting are okay. So all of them, they are talking about the accounting and reporting element of financial management can be improved. So okay, so let's come here. Let's come to the score now. Okay, please, whenever you see M2, we have two methods. We have only two methods. We have the weakest link method and we have the average method. But sometimes they will not be telling you they will not be attaching their word. This is a weakest method and this is an average word method. No, they will be using M1 and M2. Okay. If you see M1, that is method one. Method one is always the weakest word method. So if they say M1 means that is the weakest word method. Method two is the average word, average method. So the average method, what happened is that the bad performance of one indicator will not affect the good performance of the other indicator. So we score them based on average. What does it mean? I'm organizing a quiz. You did the first one, you didn't do well. Okay. The second quiz, I'm not saying that the second quiz is for redemption. No. It's just a quiz on its own. There's going to be an independent It's going to be an independent This one is going to be an independent quiz on its own. So it means that the first score, it is not going to be affecting the score in the second quiz now. Okay, so what will happen is that if I want to score you, I will now say, okay, I have conducted 5 quizzes. These are the scores that you have obtained. So I'm going to be striking this one over 10. So I have to now add them and strike it to get my the marks over 20. So that is how the average works. The two indicators are going to be independent. The bad performance of the other one will not affect the other two. Okay. It's not like tomatoes. That if one of the tomatoes is poor, the other ones will be affected. No. That is the weakest method. So the weakest method, what it means is that if I'm conducting a quiz now and you have scored, let's say 5, and I'm saying I'm conducting a different quiz for other people. So those who didn't do well should come and redeem themselves. It means that whatever you are going to get over here, the 5 that you have gotten first will affect it. That is the weakest method. So the bad performance of one indicator is going to affect the good performance of the other one. That is the weakest method, and that is always the M1. But for the M2 is the average method. So we now attribute scores to these people. So the 4, if you have 4, 4 is A, or if you have A is 4. If you have B plus, that will be 3.5. B plus can be 3.6, it can be 3.8, but mostly we give the 3.5 to it. So if you have B plus, because you don't know what figure is that, just give 3.5 to the B plus. If you have B, B is 3. If you have D plus, or you have C plus, the C plus, you can give 2.5 to it. Okay, C plus can be more than 2.6, it can be 2.8, but since we don't know the score, we just give absolute figure to 2.5. C itself is 2 and the D is 1. So this is actually, so we now come here and have the score for the first one, which is the M2. So we'll be using the M2, which is the average method. Okay, so what we now come here over here is let's we are determining the score. Okay, so we have the indicator over here. So let's have the indicators over here. Okay, then we have the score. So we just put all of them together and now give them a perfect score. So the first indicator is what?
Financial data integrity.
So financial data integrity. So what we do over here is how do we score this one? This will be scored using average method. So you can do some small workings over here. Okay. So you can do some small workings over here and say that this will be scored using the average method. So this will be scored using the what? Average method. So we have the financial data integrity will be scored using financial data integrity will be scored using this one. So let's come here. What are the results over there? So you just add them divided by the number that we have. C is what?
2.
C is 2. Okay. Then B will be what?
3.
And then D is what?
1.
And
B is
D
1.
itself is what?
3.
B is 2.
Okay, so we have 2 plus 3 plus 1 plus 3. Is that correct?
Yes, sir.
All divided by,
4.
okay. What are we having?
2.25.
Would the top give us 9 over 4?
Yes, 9 over
Yes,
4.
sir.
So 9 over 4 is giving us what?
2.25.
So 2.25. What will be the score?
C.
That will be what? C. But if it should be
C.
2, if it should be 2.25 or 2.26, what are you going to do?
B plus.
Okay, you give them C plus, isn't it?
Yes, please.
Okay, so this will be C. All right, so anything from 2.0 to 2.49, you can give them C over there. Okay, that is it. So let's count. Yes, Ina.
Senior, please, so it 2.25 is C.
Yes, please.
Okay.
I thought 2 is B.
No.
No.
B is
Oh.
3.
Okay, sure. I get
Yeah.
it.
Okay. B is 3.
So D is 1.
3.
Yeah, D
So
is
I
1.
was thinking it should be
Okay.
C plus. It's more than 2.
No, you see, if it is
B plus. Wow.
if it is 3, okay, if it is 3, the 3 is what? The 3 is the B. Okay, so 3.9 to 3 is B. Are you okay? So anything above, you see, if you count to 2.5 over here, okay, if you count to 2.5, so if you count to 2.5 over here, let's come here. So if you have 2.5 to 2.9, if B is 3, are you going to be giving 3 to someone who had what, 2.9?
Okay.
No, sir.
You're not going to be giving, isn't it?
Yes, sir.
Okay. But if someone is having 3.0 to 3.49, if 3.5 is what? Is B plus, are you going to be giving the person scoring within this level to be what? To be B plus?
No, please.
No,
No,
you'll be
sir.
giving B, isn't it?
Yes, sir.
So it's just like how you people you calculate your CGPA. Okay, so you just have to pay attention. If it is above 2 point, or it is 2.5 or 2.6, that one we can add plus. But if it is 3, that is what? That should be B. So that would be, but if it is 2.5 or those ones, then we give them C plus. That's, I hope you're okay now.
Yes, sir.
Okay.
Okay. So senior, so now it means that everything moved from 0.5, 0.5, 0.5.
Yes, please. But mostly they will not give you, I don't think you are going to be seeing a question that they will give you B plus, but it can happen. But if they give you B plus, the B plus should be what? Should be 3.5. A is 4. So B plus should be 3.5. But anything between 3.5 and 3, that should give you B.
Okay.
I hope that is fine now.
Okay. All right, sir.
Okay, so let's come to in-year reports. The in-year report, we are going to be using the weakest method that is method 1. So in-year report. So the weakest method, what we do is that the bad performance of one will affect the good performance of the other. So what we do is that we pick the bad performance, then we know the impact. We just determine the impact of the good performance on those ones. So we pick the bad performance. What is the bad performance for these people?
C.
Okay. So if the other indicators are doing well, if they show a better result, then we add plus to the bad performance. So you can see that they are all BB, isn't it?
Yes,
Yes.
sir.
Yes.
That is a good performance. So you add plus to the C.
Perfecto.
Okay. So what it means is that the B and the B over here will be affecting what? So if you score 2 and you have now scored what? 10, 10 over 10 over 10 in the 2 results, you can see that that is going to be boosting your first bad results, isn't it?
Yes.
And that is how the weakest method works. So if the first round you are playing game or you are playing football, the first round maybe they score you maybe 4-5. The second one now you have scored a person maybe 6-5. That 6-5 will now be boosting your first bad performance. That is how we go about it. Okay, so you pick the bad performance, then you look at the indicators, the performance of the other indicators. If both of them are showing positive, what do you mean by positive? If they are showing good performance than the bad performance. So this one is now C. Okay, this is C. So this is C. Before you can add plus to the C. It means that the other two indicators should perform better than the C. But if one of them should be getting C again, then it means that you just have to maintain the C. Because if the B is having effect on this one, the C itself will come and affect it again. So you just maintain the C. But if the two indicators are performing better than this one, okay, like the BB, most of the time the BB, if it is BB, then this one you add plus because it will be having some kind of a good impact on this one. But let's come here if it is what? If it is not AA. If it is not AA, the effect on the C over here will be different from, so you cannot do C plus. You cannot do C plus. So if the two are AA, if the two are AA, you cannot do C plus because it's not going to be making sense. Okay, you cannot do C plus. The best that you can do is B. The best that if you are doing this one now, okay, if let's say your terminal results, if you have gotten C plus and you have gotten AA, your CGPA will be boosting, will rise up, isn't it?
Yes, sir.
That is how the weakest method works. So the AA, the impact that the AA will be having on your CGPA is different from the impact that the BB will be having. So if this is AA now, you are doing the first one. The first one will be C plus. The A will now affect this one, and it will be C plus. Another A is coming again. Then that will now reduce to B. It will now boost it to B. So the best that you can give to this one is B. But B plus there, no. Because it's C. It is C. So A will move it from C plus. Another A will move it from the C plus to the B. That is how it works. Okay. So what we do over here is that we are going to be adding this one there. These both are BB. So we'll be adding the C plus to that particular one. So we come here and we have what? C plus. So we maintain the bad performance, and if the other indicators are performing better than the bad performance, then you add plus depending on the impact that they are going to be having. Let's look at this particular one now. Okay. So annual financial reports. Please, this one you can see they can give you a question on this one because for the assessment now PEFA is a very important tool for assessing public sector entities performance. Okay, annual financial reports. What is the bad performance over here is what?
C.
Yes.
Okay, are the two dimensions performing better?
Yes, please.
Yes.
Okay.
Yeah.
So do we have to add C? Do we have to add plus, or we can add something more than that?
Plus is preferable, even though we can add something more than that.
Okay, but you can see that is if you are getting C plus, it doesn't make sense. Why it doesn't make sense? Look at this one. BB is what?
Just a
B,
plus more.
C plus.
okay, the BB is plus, isn't it?
Yes.
So the impact that A will be having will be greater than what? The impact that BB will be having, isn't it?
Yes, please.
But
Yes.
if the BB, assuming the BB is what? Is the BB is just making it to be 2.0 or 1.5. The A will push, but the A cannot push to the other line. Okay. So if this is 2.0 now, A can push like 2.23 or 2.3. But you can see that you will still be within that particular line, isn't it? Okay. But if you have C plus or you have B, they can consider you because the impact that A and B will be having will be greater than the impact that BB will be having.
Right.
So
Okay, sir.
so this one, what we are going to be doing over here is that if you either use C plus or B, okay, they can C plus or B. That will be better.
So
Because
in the exams, if you write C plus or B, they will mark it for you.
if you pick C plus, depending on the direction that you are picking it from, okay, it is making sense. If you pick C plus, you are scoring as what the bad performance, the two good performance will be plus. Okay. Someone is saying that if BB is plus, then AB cannot be plus again because the A is going to be having a greater impact than that one. So if the person pick B, you can mark the person.
So it means so say C plus or B. That should be the answer for.
No. You can add C plus. You can add B.
Right only one.
Okay, you
Okay.
write only one. You can add C plus or you can write B. Okay. But I'm saying that if you write the B is justifiable. Why? B and B is giving you C plus. AB cannot give you C plus. You can see that the impact is going to be greater than the what? The impact that BB and B will be having, isn't it? So
Yes,
on
sir.
that basis, B, there's no problem with that. Okay. So you state how these things are determined. The first one, which is the average one, you always have to show working for it. So you now give them numerical figures and now divide. You just find average. So A is 4, B is 3, C is 2, D is 1. There's no 0. D is 1. Then you now what? You now add them divided by the number of dimensions that you have. But in this case, we have 4. But for these ones, you just say that for the weakest method, they are being scored by taking the bad performance and adding plus to the bad performance if the other dimensions are doing better than the bad performance. If the two are to be CC, it will still be maintained as C. You will still give them C. Okay, if the two are CC, you still give them C. That's how we go about it. A very simple exercise over here. Okay, they say that you should suggest 4 ways on how this thing can approve. They say accounting and reporting. The accounting and reporting element of public financial management can be improved. Okay, so how do you go about the suggestion? You can see that some of these things are not doing well. So you have to talk about those that are not doing well. You can see that completeness of financial reports, they are completing their work on time. If you talk about completeness, how to the work, the reporting, everything is complete. They are not omitting anything. And the year before they will do everything, everything is what? Everything is complete. The financial statement, it is complete. There is no issues of having issues of faithful representation. No. If you talk about the reporting in terms of completeness, it means that they are including everything. They are not even omitting one city. So the financial statements are always complete. Complete doesn't mean that they are accurate. Okay, you can be presenting all the issues over there, but there will be a problem. But in terms of completeness, in terms of the work being complete, no omissions, they are very okay with that one. So you cannot be talking about the completeness because it is A. How can you tell someone to improve? That one is having A. And you are going to be telling someone who is having A. You are going to be telling someone who is having A to improve, whilst we have people who are having C and D. It seems like you are giving advice to someone who is not there. So if you want to talk about this one, all these things are the accounting and financial reporting issues. So what are those ones that they are not doing very well? What are those ones that they are not doing very well? Okay. The timing of the in-year report is not good. The application of the accounting standards, you can see that it's also not good, isn't it? The advanced accounts, which one is the advanced accounts? Okay, it's also not good. The bank reconciliation tool You see, the bank reconciliation tool is also not good. Okay, so if you want to suggest, you suggest on those that are not good first. So we have this one, this one, this one, and this one. That is the 4. They are asking you for 4. So you can talk about those ones that are not doing well. You cannot leave these things that are not doing well and you come and be talking about completeness of annual reports. That place, they are doing perfect. They're having a perfect score. So the accounting standards, what do you think they have to do to improve their what? Their annual reports, their annual financial reports in terms of the accounting standard. The accounting standard they are talking about IPSAS. So what do you think they have to do there to be able to improve the annual financial report in terms of what? In terms of the accounting standards.
So are you asking?
Yes, I'm asking.
So okay, I can talk of education, like educating users of accounting, like on the technicalities, like yeah, that's what I want to say.
Okay, okay. So the public
So
education or seminars or
it's
conferences on the application of the what the
yeah.
IPSAS will be what? Will be very okay. Okay. What again?
So we can also say that probably with respect to uh, preparers of the financial statement and the stakeholders in general, there should be capacity building for them. Capacity building should be for them to enhance their knowledge on the various
Okay.
standards.
That is also not bad. Can you also say that the government can implement a policy that all those that will be preparing financial statements should be chartered accountants, should be a member of
Yes.
a particular professional body?
Yes.
Okay. So yeah, so for the accounting standards, you can actually see all the 4 things about accounting standard. They say you should just what? You should just suggest what? 4 ways of them what? Improving the what? The accounting and reporting one. So that is about that one. The timing of in-year budget reports. The timing of in-year budget reports. The timing. The timing of in-year budget report. What do you think they have to do there? What do you think the institution responsible for this should be doing?
Probably there was delay in submitting budget reports that could
Okay.
lead to a shortfall in the result.
Okay.
So institution should ensure that they submit their budget on time. So they submit their budget report on time to enable other institutions with the oversight response make decisions on how they executed their budgets.
Okay.
And also concerning the timing of the budget reports they prepare, it could be that the softwares they are using to assist them in their work may be outdated or less effective now. So they can employ better softwares to help them add up and make their budgets and then their report preparations a bit more quicker.
Okay.
A
Okay.
typical
That's
example is
To add up with what he said, I can also say that they can digitize their system where they introduce certain so that it will fast
Yes,
track their reports. Because mostly sometimes they
it is
use
possible.
manual systems which might delay the report processes.
okay. Okay. So what if they have all these systems and they are still delaying the what? The reporting process?
I
They
think
should
they
change
should
the
have strong
personnel.
internal controls
They should.
to ensure have strong internal controls to ensure like compliance with the timeline.
Okay.
There should be sanctions
Yeah,
for
so
delay.
that should also be part of this thing. So
Yeah.
we are all giving the suggestions. We don't know what is actually the problem. Okay. So the sanctions will also be part of what? Part of the recommendation. So maybe we are actually they have everything, but they are still trying to be stubborn. So when persuasion fails, we have to force them. Okay, so that can also be the issue. Please, since we don't know what the advanced account is about, don't even go there and say something about it. what are they saying as the advance accounts? Is it advance as advance to staffs, or what are they talking about as an advance account? So you can move from that one, go to the bank reconciliation. What do they have to do on the what? On the bank reconciliation? Maybe they will, you see, most of those people, they can live about 3 months or 4 month reconciliation and say they will do it together. Okay, so you can actually tell them that they should be doing they should be performing bank reconciliation at the end of every month. Okay, they should be performing the bank reconciliation at the end of every month. And you can suggest other issues. They are only talking about 4. So you only pay attention to the bad performing what indicators or dimensions. Then you talk about them. You just suggest ways of improving those ones. Don't go and be talking about the completeness of annual financial report. They are doing 100% well there. So if you are talking about that one, no, it's not going to be giving anything, no. So you talk about those that with a bad performance. You talk about them. That is how we go about it. Any issue about that particular one? Any issue about that particular one? We are moving to the next one. Okay.
So is it necessary to let's say if maybe based on your points you can get all of them at accounting standards, is it like important to also tackle that where you can get all your 4 points and the accounting standard?
But the question is not specify which of them that they should focus on. So if you can get all your 4 points from the accounting standards, maybe in one way or the other, the accounting standards will be having effect on the in-year budget report. It will be having effect on what? Indirect effect on the bank reconciliation. So there is no problem with that one. Is that you okay?
Yeah, I'm okay, sir.
Okay. But it will be more appropriate if you get some, at least you tackle on some 2 of them that will also not be a problem. Are you okay? All right, Charles, are you there?
Yes, I am here.
Okay.
So the B part is saying that we should prefer 4 ways by
No,
which
we have done.
accounting.
That is what we have done already.
Question 4 says we should discuss the phases of budgeting in the annual budgeting cycle, emphasizing the key activities involved in each phase.
So can you? I hope those of you that you have the mock question, you can see that the question is about something like this, isn't it?
Yes, sir. Thematic area.
Okay, so what you have to do is that right now the budgeting is not like the way it was. That will be right now. It is the full concentration is about the preparation, the reporting, the auditing, and all those things. So whatever you have to pay attention to these budget processes and the activities involved, and also the benefits of budgeting, and also some of the limitations over there, and the PEFA assessment to have the feeling that they can ask you a question on a PEFA assessment, and they can make it 10-10. PEFA assessment 10, and the budgeting will also be 10 because the 2 put together is a 20. Okay, so they are asking us to discuss the phases of budgeting in the annual budgeting cycle, and we are emphasizing the key activities involved in each phase. What are they talking about?
Yeah, I think they are talking about budget formulation.
So they are talking about the budget process. Okay, so the budget process. So they are just asking you to list the budget process, the national budget preparation process, and talk about what are the activities involved in each stage. That is it. The first stage is what?
The formulation.
Okay, what are the activities there? Budget formulation.
So here, before the Minister of Finance gets on with the formulation of the budget, he first off needs to have the fiscal strategic documents prepared, which entails the revenue and expenditure plans of government. That is what he can base his estimation of budget details on.
Okay, so like if they ask you what is budget formulation, what are you going to do?
It's the processes involved in preparation of the annual budget.
Budget formulation.
The
Budget
process
formulation is
involved in the formulation or development of a budget,
yes,
and
that
it
should be the
includes
Okay.
planning and the development of the various fiscal policies, government fiscal strategy plans and policies that will enable the government to develop its plans.
okay. So Charles, what you said, you are combining the approval and all these things together. Are you okay?
Okay, sir.
Okay, so you can also say the first stage of the national budget preparation, where the Minister of Finance will prepare the physical strategy document, which involves or which outline the government plans and the budget constraints for the year that the budget will be used for, or for the budget period. So this will now be submitted. So the budget formulation process is the first stage. So before the budget will be formulated, the Minister of Finance has to prepare the physical policy documents or the physical strategy document, which now in that particular document, you have the government policies, the government physical policies on how to generate revenue and the government expenditure, and also the budget constraints. The budget constraint will talk about the financial resources that we have. We have limitation. If there is no limitation of financial resources, there is no way we are going to be preparing budgets. We can just stand up and spend it anyhow. So the budget constraint will also be included in that particular one. And the Minister of Finance will now submit this document to the government through the cabinet. So they will look at it now, go through it. Then they will now approve it, and the Minister of Finance will issue budget instructions to the various principal spending officers of the districts, the ministries, and then the agencies. So those people will now receive the budget instruction. What do you mean by the budget instruction? The budget instruction contains the guidelines on the preparation of the budget, the format, how the budget should be prepared, what are the resource constraints. So you are going to be using that one as a guideline for preparation of the budget. So after they also receive that particular instruction, they also now make budget estimates. So they will make revenue estimates, they will make expenditure estimates. And these expenditure estimates will now be put together. Then they will give it to what? They will give it to their SETA ministers. And the SETA ministers will now submit this budget to the Minister of Finance. The formulation stage stops there. Okay, so after the budget has been submitted to the Minister of Finance through the SETA ministers, the formulation process will stop there. They will now come to the budget authorization. So the budget authorization, the stage is a stage where the Minister of Finance will call the principal spending officers. Okay, those people should come and defend. They will come for budget hearing. So you come and defend your estimates. So the Minister of Finance will call those people for budget hearing. That is the authorization stage start from that particular side. So they'll call them for budget hearing. Through the budget hearing, you also explain why this particular estimate is here, why we are having this constraint, and you are still estimating your expenditure to be more than this amount. So you come and explain, you come and defend your budget. Through that particular stage, the Minister of Finance has the right to change the estimate altogether. So if the Minister of Finance is okay with them, the Minister of Finance will now consolidate the budget. Will now put all those budgets into form a national budget. So the Minister of Finance will now submit the budget, the draft, to the cabinet again. It will be submitted to the president through the cabinet. The cabinet will look at it now, and if they are okay, the Minister of Finance will now prepare the final budget and now send it to Parliament. The approval will start from that place. So the Parliament will now receive the budget. They will table it before the Parliament, and discussions and all those things will take place now. So they will discuss the budget. They can also ask the Minister of Finance to come and change certain things over here. So you have been seeing that one on radio. But at the end of the day, what will be done will be done. Okay, like the e-levy. Okay, we are here, this and this, they were just playing with our mind before we realize, no. They say that if you are able to raise this one, we give you 5%. Do you know what 5% can do? You are there. You say they should defend you. 5% can do a lot of things in this economy. So at the end of the day, that will happen. But the budget will be tabled before Parliament. Then they will now take the budget, examine it, do the scrutiny and all those things, and at the end of the day, they will debate on it. At the end of the day, then they will now pass what we call the appropriation bill. The appropriation bill will give them, the Minister of Finance, the right to now start distributing to now start to make expenditure, or they also give them a finance bill. The finance bill is just that particular bill. The appropriation bill will now be passed as an act. The finance, or also we call it finance act. So that the finance act is for the generation of revenue. So you can now start to generate the revenue that you want to generate. Appropriation bill, you can now start to make expenditure that you want to make. So that Parliament will approve the revenue estimate by passing what we call the finance act or the finance bill. And the expenditure, they will now pass what we call the appropriation bill or the appropriation act. From that place, the implementation will now start. So the Minister of Finance will now start disbursing the funds in the manner prescribed by the Parliament to the various ministries, and they will also start spending. And he will also be monitoring also. So they will now start implementing the budget. They will now start generating revenue. So the budget will now be in action. A Minister of Finance will also be monitoring. So if the money has been disbursed, people will now start working or spending. So the monitoring and the reporting must follow. We have to be monitoring where they are. So the monitoring, one of the acts of the monitoring is where the Minister of Finance will come to Parliament through the media review to come and give an account on what happened. That's also a form of the monitoring. Okay, but most of the activities are in the formulation stage, authorization, and also the approval. After the budget has been approved, the implementation and the monitoring will come, and there's no much processes there. Okay, so you have to be able to say them, define them in your simple terms. Then you now talk about the key activities. The key activities, what are the things that are done over there? Those are the key activities that we have spoken about now. Okay, so you have to go there. You can still read your note on that particular one again. There's only 5 processes, but mostly you'll be seeing 4. The budget authorization and the budget formulation will be matched together. Okay, sometimes you see 4. So they will match the budget authorization and then the budget formulation together with Together with as the first step. Okay, but actually they are 5. Okay. Just any issue with that one, then we can now pick the issue of the number 5, where we are going to be talking about the benefit of budgeting and some of the limitations. Any issue with that, so that we can actually
No, sir.
all right. So let's take the 5.
Number 5.
Yeah.
National budgeting is not an ordinary activity of government, but a requirement of Article 179 of the 1992 Constitution, which imposes the duty on the President of the Republic to cause a budget to be prepared and laid for approval for the ensuing year before the end of the current financial year. However, some argue that national budget is a mere facade or facade, and therefore adds no value to national development. Required. A. Justify the need for national budgeting as an essential element of public financial management in Ghana. And B. Discuss the limitation of national budgeting in Ghana.
Okay, so the first one, what are they asking for?
The need for the national budgeting.
The
Which is
importance
what?
of national budgeting.
Okay, so they are talking about the importance. So what do you think? What are the importance? What do you think budgeting is important to the state or to the individual?
So since the budget itself or budgeting itself is a tool for planning, it can help us plan how to use our resources efficiently.
Okay. Okay. So stand on 1.
Efficient
it's
resources, sir.
okay. So I can to add up with what he said. It helps us to achieve value for money. That's efficiency, effectiveness, economic way of using money.
Okay. 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 That's not bad.
And also, I can talk of allocation of resources.
Okay. So efficient allocation of what?
Resources.
So if the budget is being prepared, we know which of the sector or which of the areas that will be that a lot of work will be done. So we actually share or allocate the resources to them based on those areas. What do we think? So at least you can write like 4 or 5. So let's make it 5. Efficient allocation of resources is an efficient way of utilizing resources. Okay, that is, or it helps us to ensure value for money. There's no problem with that.
A tool for communication too.
So it's also a tool for communication, isn't it?
Yes.
Okay. So most of the times the budget can communicate its plans
That's
to
the
us.
motivation.
Okay, that will also motivate you because at the end of the day, something will be there. You also put in your pocket, or if you're able to achieve the budget, that particular feeling of what I'm also part of those people that achieve this. That is also an issue over there. So it's also a tool for communication, motivation, and what again?
Setting a priority.
Okay, okay. It means that
Accountability.
so this is also a way of what it will also make whoever is going to it ensure physical discipline, accountability. It means that if they throw this question at you, you can do something, isn't it? All right.
It's also an authority to spend.
Yeah, budget is an authority to spend. Budget is the highest, if you count to the public sector, okay, the budget is the highest form of what authority to incur expenditure because you cannot spend without what? Without a budget. Okay, Nanando cannot stand up. But we have a situation where the parliament can give order to them to spend before the budget will be prepared. But that one it will be something that the parliament must approve. Okay, so the budget is the highest form of authority to incur expenditure. Thank you for that, Simeon. What about the limitations? Everything has advantage and what? And disadvantage. Okay, what are the limitations of the what?
Yeah, it's
Of
costly in time, in terms of time and then resources.
what will you join the two together? Or you have more points?
I
Yeah,
do.
I can talk of it is not an end to a means or something. Yeah,
It's
Okay.
rather
a means to an end.
Okay, this one is in terms of the time that you are spending. So the implementation of the budget is the main purpose, isn't it? But the budget will not
yes,
take, the budget preparation will now take most of the time. Okay, so the time for the budget implementation will be what? Will be short. So we now focus on the budget itself than the implementation. So that is the is not the it's not an end to it's not a means to an end, but the budget will become what end to means or whatever because of the time that you are going to be spending. We should be using more time to implement the budget, but we'll be taking more time to be what preparing the budget. So the time, the focus of the implementation will be now be shifted towards the formulation and the preparation and also the approval, and that is going to be taking our time. So it also it also
When you
hinders
talk of it stimulates innovation and creativity.
yes, the compliance with the budget is a must as far as you're in the public sector. So whatever is in the budget, you have to actually do something. So if something is coming in before you actually fix in that particular issue, is going to be a problem for you. So it doesn't allow for that kind of flexibility by changing us the easily changing the budget now to fit a situation. Okay, so someone want to combine the time and the resource. So we take that one too. It's time wasting, and the person is also saying that it might be expensive if we are now sending attention to the preparation than the other issues. Minister of Finance will come to Parliament with allowance. They will not approve it. Parliament will come and sit on the budget again. They will not approve. They will be taking that time, and we are going to be paying the allowance, city allowance for all those issues. It's going to be issue. And these people that are going to be implementing, you see that the budget will be prepared by every ministry that we have and the department that we have. And these people are going to be using resources to prepare this budget. That's also going to be a time, or that's also going to take time and also at the same time taking money. Okay. What again?
Once a budget is approved, some covered entities feel they need to exhaust like the allocation given to expenditure line items. So like they can misuse or use like the budget to be like basis for misuse of funds.
Yes, sir.
Okay, so we know that in the public sector, if you're not able to spend the money within the period, the money must go back to what? Okay, the money must go back to what we call it will go back to where it is coming from, where we say it will go back to the chest, it will go back to chest. The money must be returned to the consolidated fund. So some people, if the year is getting to the end like that, then they will not start incurring what expenditure. So they want to spend all the allocation. So that's what she's saying. Budget can also be worthless in terms of it, in terms of inflation. Are you okay? So the budget cannot be a tool for what? For performance again, for measuring performance again. Because there's inflation, so you have to inflate all the items over there. So comparing the budget or using the budget as a performance or as a controlling tool or performance measurement will be a problem. Okay, so all the things that we have said is very important. You also have to pay attention to this one in particular. That's why I've added the solution to it. The Treasury single account is a very important area. Okay, although now they are saying that it's not part of it's not a statutory requirement. Okay, it's not part of our constitution, but they are now trying to make it what as an art. It will be part of the statutory requirements. Okay, it's actually a suggestion given by the the International Monetary Fund. That is the IMF, isn't it? IMF. Okay. So in terms of the government borrowing, they have seen that the government borrowing is becoming unnecessary. So funds of the states will now be in certain accounts that the government has no idea about them. So the government, there will be state resources in different accounts. So the government has no knowledge about them because they don't have control over those accounts. So the government will now be going to borrow again. Meanwhile, they have resources somewhere. So how can we avoid that? Let's not use a unified account for all the public resources so that the government can easily monitor its cash flow and cash inflow. So the government can know the resources that they have, and if they want to make a decision to borrow, they can actually know the amount of money that they will borrow. So this is a suggestion by the International Monetary Fund. It's not a statutory requirement. Okay, but now they are trying to put it into it as a statutory requirement that all public sector entities must actually use what we call the Treasury single account, a unified account that will link all their resources over there. So it will make bank reconciliation also very simple. Okay, and even if you have bank accounts, you have a different bank account. That bank account should be kept in where the Treasury single account is. Okay, so that's why I've added this particular one. It's a very simple concept. Okay, so you can actually look at it. I've added a solution so that it can actually give you these issues. Let's discuss the conceptual framework because that will be 10 marks. Okay, the first question under the conceptual framework, mostly this is how they normally examine the conceptual framework, mostly the qualitative characteristics. Okay, this is how they examine it. Please, you have to know that the conceptual framework is very important. How is it important? It's a form of what? It's a form of guidance to preparers of financial statements to deal with issues that are not covered by a particular IPSAS. Now
Yeah,
we're using IPSAS. Okay. Now we are using IPSAS. So this one, it comes in to help us to deal with situations where there is no specific accounting standard relating to them, and the measurement basis and all those things have been specified in them. Just question number conceptual framework 10 marks. Yeah.
Conceptual framework. Question 7. The following issues were identified in the financial reporting process of a government department. A. In 2023, a department received numerous donations from local companies and international organizations to support the fight against COVID-19. These donations included several boxes of nose masks, Veronica buckets, and sanitizers. However, these contributions were not disclosed in the 2023 financial statement.
All right, let's move on.
B. The department has included a column for budget information in the Statement of Financial Performance, along with comparative figures. C. The department has reported its heritage assets in the financial statement at an estimated amount without any evidence of valuation. D. The financial statements for 2023 financial year have been issued for publication on June 5th, 2021. This is an improvement over the previous years. And E. There were changes in the accounting policies within the department during the year, which the director of the firm confirms were made to enhance the financial performance of the department. So required, discuss how each of the issues identified in A to E affects a specific qualitative characteristic of financial statements. Illustrate how each issue impacts the identified qualitative characteristic.
Okay, so let me change this date in the okay. I'm sure my screen is back now.
Yes, sir.
Okay, so this is for the qualitative characteristics. Whenever they want to examine it, this is how they cannot ask you to state. Mostly they will give you an application question like this. So we'll be taking them one by one and be saying which of the qualitative characteristics that are affected and why you think is the one that will be affected. And we look at how to answer the question when they ask you to do this particular one. Okay, the first one is in 2023, the department received numerous donations from local companies and international organizations to support the fight against COVID-19. These donations include several boxes of nose masks, Veronica buckets, and sanitizers. However, these contributions were not disclosed in the 2023 financial statement. Which of the qualitative characteristics is affected here?
Financial representation.
Financial
Representation.
faithful representation of financial statement. Don't go there and write financial presentation. If I ask you how was the paper, you say it was.
Yeah, what happened?
Okay. So that is faithful presentation. Why do you think it's a faithful presentation?
So we say that an information is faithfully presented when it is complete, neutral, and then free from any material misrepresentation. And
Okay.
in here, we can say that the information given out is incomplete. So that's it.
Okay. So if you have to, how do you answer this question? What do you know about a faithful representation? You say it. We say that a financial statement is faithfully represented when in all aspects it is no, we're not saying that it should be 100% accurate, but it's at least 95% accurate. If the information presented over there is free from error doesn't mean that there should not be errors there, but the errors over there should not be more than the correct information there. Okay, so it's free from errors. Is the error, we say material errors, those are going to be affecting the economic decisions. Okay, so it should be free from material errors. It should be complete. They shouldn't be incomplete, and they should be free from maybe issue of bias or anything over here. So you talk about what
Neutral.
the faithful presentation means. So the neutral or the issue of the bias. You should talk about faithful presentation. Please don't take your time to explain the faithful presentation and leave what they are asking you to do. No, it is better. It is necessary to talk about what the faithful presentation means. Then you can now refer that particular one to this one now and see why you are saying a faithful presentation. So one of the attributes is that it should be complete, it should be free from error, and it should be neutral. But you can see that they are not disclosing what they have captured those things in their books, but they are not disclosing it. So if we are saying donations, Okay, if we are seeing donations, who are those giving the donation? So it means that the information that you are giving for this particular year is not complete because Veronica buckets are being donated by what? By local companies. We have to know that. So if you add that one, it will add up to the statement being complete. So you are omitting these ones. You are omitting these disclosures means that you are giving us what? A half prepared financial statement, or you are giving us a half information. We cannot get all the information needed from the what? From the financial statement. So you are hiding an information from us. If you are hiding an information, it means that you are giving us something that is incomplete. So the non-disclosure of these particular donations and this one is making the financial statement not to complete because all the things that happen during the year, this donation is part. So give us information on it. Give us information on it. So you are not giving information. It means that you are giving us a half information or information that is not complete. So for the purpose of the completeness, this particular issue over here, it is the faithful representation that is affected. Okay, it is better to talk about the faithful representation and now link that particular meaning or what you think over there to what? To the issue that you have and say, because of this is why this particular attribute or characteristic is what is affected. So they are giving us incomplete information. The Veronica buckets we are for 2023. So why are you not talking about that? Why you don't want us to know about that particular one? So it means that the information that you are giving to us is not complete because there is no issue on the donations that you have received, and that is fine. Faithful what? Representation as an issue there. The department has included a column for budget information in the statement of financial performance along with comparative what? Figures. What is that?
Comparability.
Okay, whenever they say that they are adding a budget information, okay, adding a budget information will always help you to compare the actual results with the budget. So it's a comparability. So you talk about comparability first. What do you mean by comparability?
It's comparing your budgets to the actuals.
Okay, okay. So comparability, if you talk about comparability, what we are trying to say is that you should be able to identify similarities and differences between two different sets of phenomena. Okay, you should be able to identify similarities. What are the things that are in common, and what are the things that are different when you are giving two different situations, or when you are giving two different items? You should be able, or the user should be able to differentiate between two different phenomena, looking at their similarities and also their differences. And this is going to be enhanced by by issue of what we call the consistency. Consistency doesn't mean that it should be consistency doesn't mean that you should be consistency doesn't mean that, or consistency is not comparability, but consistency enhances comparability. What do we mean? If you are applying cost model for the recognition of PPE, apply that particular policy or accounting policy up to a particular period of time. So that if you are applying that, we can know that, okay, the difference between these items is either by acquisition of a different item or disposal of a different item or a depreciation of the item. So consistency is that particular one. But since they are adding a budget information over here, the budget information will help users to now find the differences between between the actual figures and also the budget figures. So we now establish variances and try to investigate them. So the budget information will help the users to compare the actual performance with the budget for the year. So that is about comparability. Whenever they say they are adding budget to that one, it's for purpose of comparing the budget with the actual result. So that is comparability. All right. The department has reported its heritage asset in the financial statement at an estimated amount without any evidence of valuation. Verifiability. Okay. Verifiability. So why are we saying that verifiability over here? Why is he verifiability? Yeah, why? Why are you saying so? Charles, are you there?
So because
Yes,
I think they didn't verify simply because like a heritage asset under PP, we don't value it. It's not part, it's an exception to the evaluation of PP. So
We don't
you don't
recognize, not value, we don't recognize it because
we don't recognize.
placing a value on it will be very important because this one, their historical value is always higher than their market values. Okay. So we don't actually recognize the heritage asset. But if you should purchase the heritage asset, then it means that amount can be measured reliably. Okay. So yeah, Sina, you can move on now.
Yeah, I'm done.
You are done.
Yeah.
Oh, okay.
Yeah.
Charles.
Yeah.
Charles, are you there?
So is the answer verifiability or reliability? Because if heritage asset cannot be valued accurately, then how? So then, if now the entity has valued it in their financial statement, then it means that the value they have placed over there cannot be relied upon.
Why can't you rely on it? Because it's not verified, isn't it?
Yeah.
Reliability is not part of the characteristics. Okay, so don't go and write that one.
Okay.
So the answer is verifiability. If you are accountant now and you have reported what? You have reported plans in the financial statement, what will management be asking you?
The basis of the valuation.
They will be asking for a proof. Okay, when did you buy the asset and what is the receipt? Why do they need a receipt for? Why are they need a receipt for? Why is the receipt needed for?
So that they will actually verify if you made that purchase.
Okay. So to confirm the occurrence of the transaction, isn't it? Okay. So now you are putting a heritage asset in the financial statement. Okay. You are saying the heritage asset is 30 million. How do we confirm it's 30 million? How do we confirm it's 30 million? We need to know the basis that you have, the valuation basis. We can take the notes now, or we can take whatever evidence that you are using. We can take it and now add it by ourselves. We can verify this figure by looking at the documents that you have used to actually calculate it and get it ourselves. If you are recognizing a heritage asset, what is the proof? What is the basis for recognizing this? You can give it to us, then we will verify that, okay, this particular item is what? This particular item has actually been purchased, or the measuring basis is accurate. So the 15 million that you are putting over there is accurate, but there is no evidence to check that, okay, what you are putting over there actually exists, or that is the actual figure for it. There's no evidence to prove the figure that you are putting over there. So we cannot verify the figure that it's not the asset. The asset can be there, but how did you get the figure? We cannot actually verify the figure. We cannot actually verify the figure. Okay, so this is about verifiability. Sometimes they can also tell you that the accountant or the principal spending officer or the DCE has told the principal spending officer to recognize this transaction through a WhatsApp message. WhatsApp message. How can you recognize something through a WhatsApp message? If they are asking for the receipts. Okay. Even if you are saying that verifiability should be a basis that two independent parties should be able to agree on the same or a similar conclusion. If the auditors are coming, what are they going to be using to conclude that this particular amount for the heritage asset is actually correct? Is the basis that they are going to be, is the evidence, isn't it? If the auditors are coming, they
Oh.
will use the evidence. Now the evidence is not there. What are they going to be saying? Are they going to be saying that all everything that has been presented in the financial statement are all material based on our analysis, based on our evidence gathered? And no, they cannot say that one. They will say it and say, except the heritage asset, we cannot obtain enough evidence to determine the occurrence or to confirm the evaluation of this one. So this is a verifiability issue. Verifiability, what are we talking about verifiability? We are talking about two independent parties should be able to reach a similar conclusion on the same item, or the individual itself should be able to confirm the existence of this particular item. How can the individual confirm that? We can go through the process that they have undertaken to get that figure. So we can pick calculator, put the figures together to check whether the 50 million that they are putting there is correct. Or we can perform the step ourselves. We can take pen to calculate the things ourselves. So verifiability can be done by individual, or it can be done by other parties. Okay, so this one we cannot verify the occurrence or the value or the basis for the evaluation. There's no evidence. So that would be an issue of verifiability. Fine, it's verifiability, but why do you see? First of all, if you have an idea, if you still have the meaning of, you still have an idea about the verifiability, first of all, talk about it. But that verifiability as a qualitative characteristic is all about two individuals reaching an agreement or reaching a similar conclusion on a particular transaction or particular item, or individual itself is able to confirm the existence of a particular item or confirm the valuation of a particular item. In this case, the heritage asset is just recognized without any evidence. So individual or a group of independent people cannot reach a conclusion or cannot agree that this particular basis that is used for valuation is accurate, or the figure actually exists. That is fine. You are good to go. You are good to go. The financial statement for 2023 financial year had been issued for publication on 30th June. This is an improvement over the previous years. Please don't look at the year. Don't look at the years. They say this is an improvement over the what?
Over the years,
Okay,
previous
so
years.
this is now improving, isn't it?
Yes, sir.
Okay, but what is the qualitative
Timeliness.
timeliness?
Yeah, timeliness.
Okay, so this is about timeliness. Timeliness is saying that financial statements should be made available as at when it is needed by the users to aid them in their decision making. So the entity now, the government department now, is now presenting the financial statement to the users earlier than before. So it means that they are now improving on the submission, or they are now improving on the timeliness as a qualitative characteristic of financial information or financial statement. Fine, you are good to go. The last one, there were changes in accounting policy within the department during the year, which the directors of the firm confirmed were made to enhance the financial performance of the department.
Relevance.
Okay, why are we saying relevance?
Because with regards to relevance, we have two elements. That's the predictor value or confirmatory value, or both. So here, the director can actually confirm whether it can enhance on the financial performance of the department.
Sometimes if you are too smart, it is not good. Okay, someone can use the confirm there to say that it's relevant. That is fine. Okay, the person will win. Okay, so that they can confirm that this is actually going to be what? Enhancing our financial performance of the department. So it's relevance anyways. But the predictive and the confirmatory, okay, the confirmatory should be something like you are able to confirm what has happened in the past. Okay, so this is the reason why this thing happened. We should be able to confirm what has happened in the past. Predictive is that we should be able to predict what will happen tomorrow, or what has happened in the past and what is going to be happening currently. Okay, but this one, if you come to IPSAS 3, accounting policies and those ones, when do we change accounting policy?
When it is required by the IPSAS.
Okay, when it is required by the IPSAS or the standard. And the next one is what?
When it's as a result of management decision.
That's what management is. Management will change it. If it's a voluntary change, it means that management is now saying that this particular accounting policy will result in a relevant and what reliable information that will be provided to what to the users, isn't it? Okay.
Yes, sir.
So you can see that they say this person is now the director is now what accepting this particular one. The director is accepting because the director knows that this will provide a relevant what information to the users. Okay, you cannot accept a change that is not relevant to you. That is not going to be adding value to you. You cannot accept a change that is not going to be relevant to you. We are accepting the change because this change is going to be providing a good information now about our performance. It's going to be providing a relevant information about our performance now. Okay, so you can either say the confirmation side of it, okay, or you can take it from the IPSAS 3. The IPSAS is saying that entity can only change the accounting policy when that particular one is what is required by the IPSAS. Or management is now saying that the change is now going to be providing relevant and reliable information about the entity. So since they are now accepting the change, it means that this particular change is going to be providing a relevant information. Or you can only accept a change that is going to be relevant to you. Or you can only accept a change that is relevant to you, or that is going to be relevant to you. So accepting this particular one means that it's going to be providing a better information than the previous accounting change or the previous accounting policy, which means that the previous accounting policy is not giving us or it's not giving the users a clear information about us. The information given to the users are not that important. So changing now means that we are going to be providing a relevant information. So it's a relevance. Okay, how do you go about it? You first of all talk about relevance. The qualitative, the relevance is saying that information provided should help the users to be able to predict or confirm whatever is going to be happening. So the information should have a predictive value and also a confirmatory value. Or the information given to the users should be the information that the users need that particular time. That information should make a difference in any decision that they are going to be making. So changing the accounting policy now going to be changing the decisions that they are going to be making because it will be providing a better information about the performance of the entity. So first talk about, yes, you cannot relate the characteristics to the question if you don't establish what the characteristics is. So after saying the meaning or what you know about it, then you cannot capitalize on one of those things and say that, okay, this particular statement of financial information is lacking this particular attribute. Therefore, it is affected by that particular characteristics. This is how they normally examine the qualitative characteristics. They are not going to be asking you to state. They will give you these things to identify and explain. It should be able to do something. It should be able to do something about this when you are being called to do something. All right. Let's come to just number 8.
Yes, sir. Question number 8.
Yeah.
The objective of measurement is to select a basis.
Sir.
Yes, please.
Also, please, I want to ask for one favor. I don't know if it's only me. It seems that I'm having network issues. So by the time I come back, the thing will be maybe if you are in question 1, then we go to question 3 or 2. So I'm suggesting maybe for the explanation and then maybe the point, if you can at least list them so that maybe like we can see it when we come back or you join it later. Thank you.
Our meetings are recorded, so you can actually play and do everything. Because me, I'm lazy. I don't like writing. If it should be calculation, that one day I will do. But
So
writing,
let God touch your heart for that thing.
okay. So for me, I'm a very lazy person, so I don't like issues of the theory. But if it should be a calculation, that one day we do it because I believe that a calculation, if it is 20, that will be there, 20 will be there. So if you don't understand it, no. But the theory we have our own English, we have our own ways of expressing ourselves. So for the theory part, I don't actually stress on that one like the calculation. But the calculation If you have to divide by 2 and you are dividing by 3, you are wrong, and the remaining things will be wrong. Okay, but for the theory, you can actually write something and find your way and go. Okay, so for the writing, like, okay, but I'll try. Don't worry, I'll try. But I cannot assure you that I'll do it, but I'll try. Okay.
Question number 8.
Yeah.
The objective of measurement is to select a basis of measurement that fairly reflects the cost of service, operational capacity, and financial capacity of the entity. This shows that the values or amounts of assets and liabilities displayed in the financial statement is as good as the basis used. Required. Explain 5 bases of measurement of liabilities in the public sector.
Okay, please, you should be able to know the objective of the measurements. Okay, these are to determine the cost of service, operational capacity, and functional capacity. There are 3. They can actually ask you a question on this one. Okay, so keep it in your mind. I don't think we have a question like that. So the objective of the measurement basis, when do we measure the assets? To determine to determine cost of services. So what is the cost of the assets now, and how much can we charge? To determine whether we have the capacity to operate, and also to have the financial capacity. Do you have what it takes to continue operating in terms of money? Can we replace all those things that we have? So you have to pay attention to that one. Okay. But what they are asking us over here is the measurement basis for liabilities. It has been the asset. The measurement basis has been asset over the 2019-2024 syllabus. The measurement basis has always been asset that they have been asking. But they can decide to change now and make it liability. So we are talking about measurement basis. Measurement basis, we are talking about the amount, how to determine the amount at which the item will be recognized. So that is how do we determine the amount at which the item will be recognized? That is the measurement basis. And we are talking about liabilities over here. Just give us one measurement basis of a liability.
So we have the historical cost.
Even if you are sleeping, the historical one should be the first one. Okay, even if you are sleeping, we can measure an item using the historical cost, the time or the cost of the item at the time that the transaction happened. We can keep it like that, keep it on that particular amount till the time that we are going to be selling that particular item, or we are going to be consuming, or we are going to be settling it. So just explain the historical basis to us now.
So the historical basis of measurements is just the cost at which you assumed the liability.
No, not plus. Just don't complicate things for yourself. As the assumption price is different from the historical. Okay.
Yeah. So it's just that's price of the liability. Okay, maybe it's the terms I'm using that's
What about obligation? The obligation. Oh.
Just come again.
Is there okay, Charles, okay.
So I'm just saying that the historical cost is the cost at which you assume that liability, or the price at which you agreed upon to assume the obligation.
No, that is assumption price. Just.
I think the historical cost is the cost that you settle the liability when you I understand, but putting it in a sentence form is becoming difficult.
Price, Charles.
Sir.
The historical cost, the historical cost, if it should be an asset, we are saying that the cost at which the asset was purchased at the time or the acquisition date, isn't it?
Yes, sir.
So if you come to liability, is the value of the liability at the time the liability has been incurred. That is the historical cost. So if you're owing somebody 10 cedis 2 years ago, that is the historical cost. That is the value of the liability at the time that you incur that particular liability.
Okay, sir.
Okay. The next one is what?
We can have the cost of fulfillment.
Okay, the cost of fulfillment is what?
It's just the cost involved in trying to fulfill a liability.
The cost that you are going to be incurring to fulfill the liability, isn't it?
Yes, sir.
Okay, so mostly the politicians, they use the cost of fulfillment. So the cost that you are going to be incurring to fulfill an obligation or promise that they have. So they will tell you, this is the promise. What is the cost that you have to incur? So if I'm telling you that I'm going to be buying you iPhone 16, what is the cost that I have to incur to fulfill that promise? So maybe I have to import the items, I have to do repairs and all those things. I'll put all those costs together to have the cost of fulfillment. That is the cost I have to incur to fulfill that particular promise that I've made to you. So the cost that you have to incur to fulfill an obligation, that is what we call the cost of fulfillment. Okay. What again?
You have the market value.
So the market value is which one?
It's the fair value.
Okay. So what is the fair value?
Is that value at which willing and knowledgeable parties a willing and a knowledgeable party accepts a liability at an arm's length transaction.
Okay. Okay.
And
Okay.
the cost of okay.
Now you can talk now. The market value is just the fair value. So if two parties are now coming together to now settle this liability, okay, if two parties are coming together to settle liability, okay, how much would the person be willing to accept? So you are owing me 10 million. Now you want us to sit down and talk about the amount I'm going to be accepting. So if at the end of the day I've accepted 9.5, that is the value fair to the two of us. That is the value that we have agreed on. That is what they call it, fair value. That is the value that we, the two of us, we have now accepted to be fair to us. That is the value that we have accepted. That is a value fair to the both of us. That is what they call it, the fair value. So the value at which the liability will be settled between two knowledgeable people. We have information about the thing. So we have agreed on that particular value. That's what we call the fair. That is the value fair to both of us. That's what we have agreed on it. That's what they call it, the fair value. The value fair to both parties. Both parties, fair value. Okay, just let's move on.
The cost of release.
Okay, the cost of release is what? Okay, let me. So someone is saying that I should write. So let me have the measurement basis of liability. So we have the historical what?
Historical cost.
We have the historical cost. We have the
cost of
The market
fulfillment.
value.
okay, cost of fulfillment.
Market value.
So we have the market value or the fair value.
Cost of release.
Okay, so we have the market value or the fair value. So we have cost of what?
Release.
Okay. So what is the cost of the
Advance.
release?
So that one is like net selling price when we come to assets. Is that immediate cost a person owing a liability would have to incur in order to release himself of that liability, or that price at which a third party is willing to charge the current owner of the liability in order to assume it.
Okay, Charles, you have tried. Please don't go there and be writing it's the same as net selling price. What is the net selling price? The examiner does not understand what net selling price is. So if you are saying that it's the same as the net selling price, what is the meaning of the net selling price? What is the meaning of the net selling price? You are saying that it's net selling price. Is that what you're going to be writing? What is the meaning of the net selling price? What is the meaning of the cost of release? Okay, if I have a liability now, okay, maybe I'm owing somebody now. Okay, and I'm traveling out of the country. Okay, I want somebody to assume or somebody to now have this liability and pay on my behalf if I'm not there. How much am I going to pay that particular person to accept that particular liability on my behalf? That's a cost of release. That's an exit price. the amount that I have to pay, maybe to a third party or whoever is going to be taking liability, to be free from that particular liability. That is what we call the exit price or the cost of release. So the government of Ghana, they can have loan now. They cannot pay the loan. They want to transfer the loan to a private individual. The private individual is not willing to accept the loan. You are now forcing the loan on them. So how much are they going to charge you to relieve you of that particular loan? That's what we call the cost of release. So if the government of Ghana is giving a loan to those people, okay, the people, they don't want a loan. The government of Ghana want to release themselves from that particular loan. Okay, the people are also seeing the loan that to give them benefits. So the government of Ghana is telling them that, okay, the people are saying that we are going to accept this amount. But the government of Ghana is also saying that, okay, if I should release myself of this particular loan, I'm going to be getting some benefit over there. So if I take the benefit from the amount that I'm paying, how much will be the net amount that I'm paying? That's why we have the net selling price. But the amount that you have to pay to either a third party or someone to release yourself or to exit that particular liability, that's what we call the cost of release. So if I'm traveling, I want my brother to pay. How much will my brother be willing to take that particular or to make that payment on my behalf if I'm gone? The amount that my brother is going to be charging me, plus any benefit that I'll be getting from that particular one will be the cost of release. So the cost I have to pay to exit a particular or to exit a liability or to exit a transaction, I want to be out of that one. Maybe the liability might be, I have to settle the thing in 4 years' time, but I don't want that particular situation now. So either I want to pay now or I want to transfer to somebody. What is the maximum amount that the person will be accepting to take this particular liability from me? That is the cost of the release. That is the cost of the release. The assumption price is the opposite of that one. For me, I need the loan, but my brother, he doesn't want the loan. Okay, so me, I need the loan. So if I need the loan now, it means that the person has to give me that amount. So the person also is enjoying from the loan, but you also need it. How much are you going to be paying to that price to take the liability from the person? That's what we call the assumption price. How much do you have to pay to assume a liability? So the government of Ghana needs the loan, but a private individual has seen a lot of benefit with this particular loan. So they are now asking the government of Ghana to give them a loan. And the government of Ghana is not willing. So how much would a private individual pay to government of Ghana to accept to take the loan? That's what we call the assumption price. The price that you are going to pay to assume a liability. Okay, that's what we call the assumption price or whatever. Okay, please, they haven't asked this one before. So they can actually focus their attention to this one. But whatever be the case, don't forget the historical cost and the fair value. Don't forget the historical cost and the fair value. Although this cost of fulfillment, you go there and you cannot remember these three, but at least you should have a way of having abbreviation for them so that you cannot forget them. Okay, so we have the historical cost of fulfillment, fair value, and cost of release, and then the assumption price. Okay, that is basically about that. You don't have to say what is in the notes. You understand it your own English. You can actually, you are going to be communicating. So that is not a problem. You don't have to go and memorize. Just try to understand in your own this ones, and you'll be able to be fine at the end of the day. You will be able to be fine at the end of the day. Just
Yes, sir.
okay. Let's look at the 9.
Question number 9. The conceptual framework have provide guidance in dealing with financial reporting issues not dealt with by IPSAS or RPGs. In these circumstances, preparers and others can refer to and consider the applicability of the definitions, recognition criteria, measurement principles, and other concepts identified in the conceptual frameworks. The required: A. Explain 5 qualitative characteristics of general purpose financial reports, and B. Explain the 2 benefits and 3 challenges of the adoption of IPSAS as a framework for financial reporting in Ghana. And 3. Explain the 4 key elements of financial statements and detailed their basis of recognition in the financial statements.
Okay, so for the first one, I hope we can we can do something about it because we just spoke about them, isn't it?
Yes, sir.
Yes.
Okay. But what about the benefit of adopting IPSAS? What do you think would be the benefit of governments of Ghana or government of Ghana was accepting the full implementation or accepting the adoption or the application of the IPSAS in the preparation of their financial statement? What are the benefits?
So it improves the quality of the financial statements presented.
Okay. Okay. So let me write for
Accountability.
okay. So let me write for the madam benefit of adopting IPSAS. Okay. So improve quality of the financial statements So if you're adopting the IPSAS, what it means is that you are just using accrual basis. So the question can ask you, what is the benefit of adopting the accrual basis? All IPSAS are prepared or are issued on accrual basis. It's just like asking for accrual basis. So also improves what? Accountability and decision making. Okay. So improves accountability and what? Decision making. Okay, improves accountability and decision making. So if we come to the accountability, what we are talking about is that if they are using cash basis, you see that some revenue will be made, but they will not recognize it because we haven't received that amount. So we cannot actually identify the true performance of the entity to see whether these people are doing well or they are not doing well and whether to fire this person or not to fire. Okay. So what are some of the other benefits?
So it fulfills international requirements.
Okay, so fulfilling okay, or conforming to international requirements, which can also help you to have access to what? International borrowings or something. Okay. Some of the banks, if you want to borrow from them, they will say that your financial statement should be prepared on what? On accrual basis. So this can also help you to have access to assistance from what? From donors or whoever is going to come in. So it conforms with what? So conforms with international requirements with international requirements. Okay. What again? What do you think will be happening over here also again? Can we talk about issues of what? Improving comparability among what? Among entities. It helps us to compare.
Yes.
Yes, sir.
Yes.
So we can also talk about the improves comparability. So this one is just shortcut. So if you go there, you write it very well in a proper English. Okay. Can we also talk about so how many do we have? We have about 4. Let's make it 5. Okay, someone is talking about enhancing international trade. Enhances international trade. Enhances international trade. Can we also say that ensures proper management of what helps in helps have to ensure proper management of what? Of capital assets. Okay. You can see that if you're using an accrual basis, you are going to be depreciating the assets. So you can monitor the assets, when to replace them and when not to replace them. You are going to be keeping the asset register as compared to if you come to the cash basis. Cash basis, whenever the assets are being acquired, we write them off as at when they are being what? Okay, so we have done accountability and transparency already. Okay, so that will also help you to manage your assets very well, because you are going to be keeping the asset register. You are going to be depreciating the asset, so you know when to replace an asset and when not to replace an asset. So this okay. Now let's come to the challenges. So the challenges, the first one will be what?
The lack of political will and support.
Okay, so sometimes we don't have the political will. What it means that the government will know what? The government will not support it, because if the government is supporting it, it is going to be exposing them. So implementing the IPSAS up to the full level will be what? Will be a problem. Okay, so someone is also talking about legal requirements. Okay, so the legal requirements. Okay, so you also have to conform to certain issues. Okay, you also have to conform to certain issues. So you can also talk about a conflict between or conflict with, okay, conflict with national legislations. Okay, so this one, it's always what? Conflict with the national legislations. So we have our own. If you have any law that you are going to be using, so the cost of implementation is also there. Human and technical capacity is also going to be there. So sometimes this will actually be what? You see, if you come to the IPSAS, so they are saying that if you have a national legislation or a national accounting policy that is conflicting with the what? With the requirement of the IPSAS or the IFRSs, you have to put the national one aside and use the what? And use the international accepted one. Okay, so that will also be a challenge over there. So cost of implementation will also be a problem. And we also don't have the time consuming. Okay, so it will be time consuming to implement. That is also important. Okay, time consuming to, okay, so the human capacity we don't have. Okay, so we don't have the human capacity or the expertise to implement this particular one. Okay, so it's going to be, the challenges is going to be the cost of implementation is going to be very high. So it is going to be a cost issue over there. It's also going to be conflicting with what? With our national legislations. It's also going to be, we are going to be having a problem with where there is no institutions, there's no independent institution that is supporting the agenda of the IPSAS. So implementing the IPSAS now become a problem to us, or become a challenge to us. Okay, so just take the last one over there for us. Let's see. So elements of the financial statement. What are the elements?
So assets,
liabilities,
expenses.
So we have
Expenses.
assets, liabilities.
Expenses.
So we have the
Revenue. Owner's contribution. Owner's distributions.
Okay, so the owner's contribution and distributions, or they are all, so that is the equity that they have actually done to be those ones. Okay, so I hope we can say something about these ones, isn't it? Okay, so there's
Yes,
no
sir.
problem with that. Just let's take the last one. Then it's like most of us, we are just back from work and we are tired and we want to sleep small. So just take the number 10 for
Okay.
us. Yeah.
Question number 10. Conceptual Framework for General Purpose Financial Reporting by Public Sector Entities is a document developed and approved by the International Public Sector Accounting Standards Board. This framework provides guidance in dealing with financial reporting issues not dealt with by IPSAS or RPGs. In these circumstances, preparers and others can refer to and consider the applicability of the definitions, recognition criteria, measurement principles, and other concepts identified in the conceptual framework. So required: A. Explain the two main mandates or objectives of IPSAS B established by IFAC. And B. Distinguish between general purpose financial reports and special purpose financial reports. C. Explain two constraints on information included in general purpose financial reports. And D. Discuss four measurement bases of assets identified under the conceptual framework for general purpose financial reporting by public sector entities.
Okay, so what are the distances? Okay, so what are the mandates or the objective of the what? Of the International Public Sector Accounting Standard Board? That is what they are saying. What is that? What is their mandate? Okay, so setting of standards. Their mandate is to review and set what new accounting standards. So objective is to so objective. So the objective of or the mandate, objective or the mandate of the International Public Sector Accounting Standard Board. The first one is to review, is to develop. Okay, let's put all of them together. Okay, so review should come first. So review. Okay, develop, review, develop, and issue accounting with standards. Okay, so what again? Okay, promote the use of the IPSAS, promote the use of what? The use of the IPSAS. Okay, what again?
So it also promotes articles published about the use of the standards.
Okay, so those articles that are useful to the what? To the application of the IPSAS, they are going to be promoting those ones and also accept these ones also. So they also ensure the acceptance and the conformity to the standards. Okay, the mandates, they have that all the mandates over there. So ensure compliance and all those things, they are there. There's no problem with that one. If they call you, the first mandate is to develop and issue accounting standards. So you can add those ones now. Distinguish between general purpose, distinguish between general purpose financial report and specific purpose financial reports. What is the difference? Charles, what is the difference?
The difference is that for general purpose, it's prepared for the public. So generally for people who need information about the entity for decision making, but the special purpose are provided for are prepared for specific entities to meet specific requirements they are requiring of us to meet.
Okay, anyone else to take us with that one?
Okay, so the general purpose financial reports are intended to meet the information needs of users who are unable to require the preparation of the financial reports to meet their specific information needs. But the special reports are prepared to respond to like requirements of the users that have authority to prepare the financial reports.
Okay.
For particular purposes. Yeah.
Okay. So if you talk about the general purpose financial report, the report that is being prepared, the financial report that is being prepared, the financial statement that is being prepared to us, the ordinary people, or the financial report that can be in the public that everyone can access, or everyone can have access to it, for the general purpose. Okay, that's what we call the general purpose. So that one is just prepared to meet the needs of the individual. Those we don't have the ordinary individuals, those financial reports that will be in our domain. That's what we call the general purpose. But those that will be with with Parliament, with the Minister of Finance, we can see that we don't have access to them. So those are for specific people. They are for specific purposes. They are prepared on demand. So the specific purpose financial reports are those reports that are prepared on demand to the users that have the responsibility and the authority to request for those financial statements. So Parliament can be one of the users that can request for a report statement from MDA or a ministry or a department. But someone like us, we cannot write a letter to, or cannot even call the accountant or the principal accounts officer or the spending officer to prepare this report and give it to us. But those that are going to be general report that they have to prepare and publish, that will be in our domain. That's what we call the general one. Is for everybody. It can be accessed by everybody. But those that only specific people can access that one on demand. That's what we call the specific one. So the general purpose is prepared to meet the needs of the general public. But if you come to the specific one, it is prepared to respond to those who has the authority to request for those ones. So it is prepared on demand. And it's not everybody that can have access to that particular report. Two constraints on information included in the general purpose financial report. This is what they are calling the general purpose financial report. It's just a financial statement that will be in the public domain. That's what they are calling the general purpose financial report. What are the constraints? Two constraints.
Materiality, cost
Okay.
benefit,
And the
balance
balance
with their
the
qualitative
qualitative characteristics.
Okay. So we have the materiality, the cost benefit. So sometimes if you look at the cost benefit analysis, you cannot be able to prepare a financial statement that is going to be having all these characteristics. Sometimes you also look at the time. So the time too, your boss is now asking you to prepare a report for 12 months within 2 days. No, because of the pressure, you are going to complete the work, but you'll be submitting incomplete or wrong report. It means that is going to be lacking the element of faithful representation. So it means that because of the time given to you, you are now preparing a report that does not comply with the faithful representation. So that are the things that they are talking about. What are those things that can hinder a financial statement to have all the required characteristics? Discuss 4 measurement bases of an asset. Identify another conceptual framework for general purpose financial reporting by public sector entities. So what are the measurement bases for assets?
historical cost,
Okay.
We have the fair value,
Okay.
net selling price,
Okay. Or net realizable value. What
the
again?
value in use,
what are the
Value.
value in use?
Okay,
Yeah.
value in use is part or present value. What again?
Okay.
Replacement cost. Okay. All right. So those are the measurement bases. We have the historical cost, we have the value in use, we have the net selling price or the net realizable value, we have the replacement cost or the current value, and we also have the fair value. That is it. Please, any issue about the things that we have done. So we have done the budgeting and PEFA conceptual framework, and we have tried something on the final account, but just that we did cash flow. Okay. Any issue? Yes, please.
Can you please come again with the ID because my network went off again.
Historical cost,
Okay.
fair value,
Okay.
replacement cost,
Okay.
value in use,
Okay.
net realizable value or selling price.
Okay, thank you so much.
Okay, together. Just
Hello, sir.
yeah, any issue?
Please, for me, no, sir.
Okay, so Anna, you are the course rep. So if you don't have any issue, it means that the class will automatically don't have any issue as well. So seniors, any issue? All right. So if there are no issues, tomorrow same time we are doing IPSAS and part of the what of the issues on corporate governance. Thank you for coming. I'll see you guys tomorrow. All right.
Thank you too.
All right.
Thank you, sir.